Greg Secker, founder of Learn to Trade, is an entrepreneur, philanthropist, and highly proficient currency trader who has made it his personal mission to bring Forex education to the masses. Having been one of the youngest bank vice presidents in history and instrumental in developing some of the first ever online currency trading systems, Greg went on to retire as a multimillionaire. Today, Greg runs one of the largest trader training organizations in the world. 1997, Greg works with Thomas Cook Financial Services to develop one of the first online real-time Forex trading platforms named Virtual Trading Desk. 1999, Greg becomes Vice President at Mellon Financial Corporation in Pittsburgh, USA, putting him in the same room as some of the best traders in the world.
I learned from some of the best traders in the world not how to understand the financial markets, that's practically impossible, but by executing on two things: what to do, and most importantly, when to do it.
This exclusive access to traders allows Greg to quickly absorb their methodology and a whole host of institutional strategies. Greg uses his skills as a technologist to help traders automate their trading strategies, and as a result is able to develop his own trading system. 2003. Greg retires from Mellon Financial Corporation, and Learn to Trade is born within 3 months, opening their first site in London, teaching people the same institutional strategies. Fast forward to 2017, and Learn to Trade has offices all around the globe. With a group value in excess of $100 million, Learn to Trade has become an award-winning education provider who have trained over 250,000 people worldwide, accruing dozens of awards including Fastest Growing Company, Best Educator, and being listed in the top 30 most caring companies. Greg himself is globally ranked as number 151 out of 200 philanthropists by Richtopia. Greg is also routinely called upon by the media for his opinion on market direction, often speaking alongside some of the world's most influential people such as Tony Robbins, Richard Branson, Robert Kiyosaki, Donald Trump, and Bill Clinton.
I guess the greatest trick I ever learned was from Sir Richard Branson himself, which is hire people better than you. So over the last 10 years, I've been scouring the planet for the best traders, the best mentors, and the best trainers, and then developing those key individuals to really build an elite team.
Learn to Trade teaches private individuals how to identify buying and selling opportunities from the Forex market, whether the markets are trending up or down. They don't just show you what to do, but put you on real trading floors with real traders and mentor you one-to-one.
And that's what we've been doing uniquely different, really, for the last nearly 15 years. Behind us, in the room back there, we show you the theory of what to do. In here, this is where the rubber hits the road.
Greg and his team then turned their attention to developing trading software. The result is smart charts, the latest innovation in trading technology specifically designed by traders for traders.
You know, when we built smart charts, it wasn't really dreamt up in some lab. It was built here on the trading floor.
The software features Greg's battle-tested strategies built into the core of the system. It scans the markets, identifying buying and selling opportunities, and presents them in an easy-to-understand traffic light system. The software allows the user to place trades with a simple click of a button, whilst providing vital information and feedback about the user's trading performance. One of Greg's most proud and passionate achievements is the Greg Secker Foundation.
We've grown a lot over the years, and we've never lost the image of ourselves as a big family, even if it's one that now spans the globe.
The foundation runs exciting projects, such as the Flying Trader, where traders from around the globe participate in a live trading session held by Greg from a helicopter high over London. The foundation has recently taken on its largest challenge to date and has rebuilt an entire village in the Philippines that was devastated by Typhoon Haiyan in 2013, a disaster that displaced over 4 million people and caused death and destruction on a massive scale. The foundation created a fantastic and challenging vision. to build an entire village of 100 brand new homes with structures capable of withstanding future typhoons.
I was always taught as a child that if you have the power to help, then that's exactly what you should do. I'm very proud of what we as a trading family have been able to achieve, from rebuilding villages in the Philippines to supporting new development centres across South African townships.
In January of 2018, after 3 years of construction, the foundation completed on its vision and handed the keys to 100 homes to the beneficiaries of this project in an emotional and spectacular display of joy, appreciation, light, and community spirit.
The irony is, those who give the most tend to be those who have the most.
Trading the currency markets is no longer an activity for the elite or the chosen few. Today, more and more private individuals are participating in the Forex market. If you would like to develop a skill set that could help you make informed decisions about your own investments, you've come to the right place to start.
Hi everyone. Look, I'd like to start off by saying a very big thank you for attending our Lifestyle Trader event today. Look, this is going to be great. My name is Greg Secker. As you're probably well aware, I'm a currency trader. I've been in the markets now for just over 25 years, and I must say I am very excited to be given the opportunity to be speaking to you right now because we've got something very special for you today. Today's webinar is a little bit different compared to what we normally do. We are using the fact that we're now approaching a very exciting time of the year as an opportunity to launch a brand new project, which I will be sharing with you a little bit later on today. So hopefully you saw the intro video and you've got a good idea of who I am. I want to make sure this webinar, look, isn't a eulogy to Greg Secker. I think you've all got a good understanding of who I am, but yeah, I've been trading the currency markets for a quarter of a century, and there's nothing I don't know, I don't think, about how to make money from it. So let me do a quick visual and sound check just to make sure you can hear me, you can see me clearly. So if you can give me a quick hello in the question box, somewhere in the webinar software, there'll be a little question box for you to type in a quick hello to me. By the way, if I look in this corner, this is me reading your comments. Hi there, Jonathan, Sam, Brett, Claire, Greg's another Greg, Jack, another Sam, Clive, David, Michael, Rakesh, Tamsin, Roy, Stephen, Rob, Samantha, Connor. I'm going to try and read everybody's names before they disappear. Vince, Steve, Karen, Katie, Tim, Anita, Josie, Sarah, Mike, Simon, Ajit, Adrian, Raj, Janine, Pat, Jamie, Peter, Chris, Colin, Joe, Stuart. Okay, there's a lot of you. I wish I could read everyone's names. And also just let me just check to see if there's any delays in communication. So can you let me know what town or city you're watching this from? So good, I'm seeing the locations coming. Oh, they're coming through quick. Okay, I've got London, Leeds, Watford, Bristol, Nottingham, Manchester, Dublin, Chipping Sodbury, always loved that name, Harlow, Milton Keynes, Leatherhead, oh, you're just up the road from me. I'm in Surrey, Brisbane in Australia, thanks for joining us, bit of a time difference. Inverness, Cape Town, oh yeah, so quite a wide audience we've got here today. We've got Belfast, Marseille, Luton, Leicester, Cardiff, Edinburgh, Coventry, Southampton. So look, we've got people from all over the world here today. Thank you all of you from around the world for joining us. And by the way, that questions box, I'm going to be referring to it heavily. So just to let you know, there's 148 of us in this webinar today, and I'm going to be relying on that questions box as our method of communication. Now, by the way, you won't be able to see each other's comments, but myself and my team can see all of yours. So I'll be referring to that box a lot because I want to make sure that you're understanding and following along. Because I'm going to be checking that box for feedback. I'm going to be covering some really important content today, and that's the sort of content you can implement almost immediately. So what's really important, please, is to make sure that you can find a quiet place in your house. Make sure there's no distractions, no kids running around, because I'm not going to be repeating this event again. I want to make sure that you follow everything I'm going to cover. And by the way, grab yourself a notepad and pen as well, because we're going to be covering quite a lot of very useful content. Now,
because I'm going to get quite technical at times, I want to make sure that you're fully understanding. So I'll be checking in with you. Does that make sense? Yes or no? Right, I'd really appreciate, actually, if you could do me a favour. When I ask questions, type in a little yes or a little no, and it'll give me an indication if you're confused or if you're perfectly understanding what's going on. All right? So that questions box is going to be our friend today. Now, let me give you a little bit of a breakdown of what we're going to do today. As I mentioned, it's going to be quite an exciting event today. That's why you're with me and not with one of my team. This is a launch event. I'm actually going to be going straight into how trading actually works. When you've got all the charts in front of you, what does it actually mean? There's a lot of meaning behind those charts, and the charts really are always telling us a story. I'm also going to teach you, and please write this down actually, I'm going to be teaching you one of my favourite all-time trading strategies known as the T-wave trading strategy. And that T-wave trading strategy is one of the first strategies I learned, this is over 25 years ago, on the bank trading floors when I started back in the early 90s. So this is a strategy that really has stood the test of time. I also think a good one for you to begin with. And I thought, what better way of actually showing you how the strategy works than for me to actually do a demonstration with you guys on my computer here today. So that is what's going to happen. Let me ask you a quick question on that. How many of you would actually like to see a demonstration done live to you today? Let's have a quick look. Okay, I thought so, yeah. Well, I thought I'd make it a little bit different today because you're with me. And when I was preparing for this session, I was kind of going through with my team the last sort of 25 years of trading and trading. I think we're over 400,000 people now in the last 20 years. And I was thinking about how do I give you today on this webinar the best value for your time? And the thing is, when you've been involved with this and up to it as much as I have, you can talk, I could talk about this for days, but I realized that the most important thing I could do for you was not just show you how we do it on our trading floors across the world, but to show you that it's something that you can do as well. And I want you to show you that by today, I wanted to show you on my computer. It was a good idea because not only will you see how it works, but more importantly, when I show you it, you should be able to realize, you know what, I could probably do that myself. And that's really my outcome for you today. So that's really I really want to get you to that, which is that you can realize that you could use the same strategies that I'm using this week. And so I'll show you how it really works from soup to nuts, if you like. I'm also going to be going to the rules that I follow for trading. So these are rules that I was taught by some of the best traders in the world, literally on trading floors all across the globe. And I suppose my number one tip is look, just please do not use your emotions when it comes to making trading decisions. That's probably the big one. I promise you, your gut was never designed to forecast financial markets, and that's really not going to help you. A lot of people do rely on it still. Those emotions are actually going to detract from what you do. So I want you to understand I follow processes. I'm very process driven. When this and this and this happens, I'll pull the trigger and I'll place that trade. And if it doesn't, I'll wait for something else. The markets are always moving, but I have processes. I'm quite OCD, I suppose, by nature. So being quite process driven suits me quite well. And if you're the same, if you're the same as that and you like a process, kind of an ABC, step-by-step to follow, you're going to get on well with this. There's also 5 different types of trading strategies. So depending on the personality type that you have, there'll be certain strategies that resonate with you, certainly more than others. And so if I was to ask you right now, what kind of trader are you best suited to be? You probably might not understand how to answer that question. Let me know if I'm right or wrong on that, by the way. Okay, good. So we might find out that you are best suited, for example, to fast time frame trading. That's not getting in, getting out of the markets very quickly. We may realize that you're actually not that at all. You might be best suited towards a more laid back investment style of trading, taking advantage, in that case, of movements that happen over months and years, or you may be somewhere in between. We will find out. But regardless where you are, we're going to figure it out very quickly. And please remember, any questions you have about me, feel free to just fire away in that question box. Now, look, I think a great place to start the webinar really is with a question. And I think the best thing we should begin with is, why should you actually do this in the first place? You know, having spoken to many of my team who are calling you today, making sure you all got logged in, and they mentioned to me that you guys are very excited that I was running the session today about trading. And obviously, the money that you can make from it is very attractive. And everyone's, of course, got a friend who's doing well, and of course that's fantastic. But what's that money for? What's the motivation behind why you want to be trading in the first place. I like to identify the aims to begin with, because what also determines that kind of strategy that you should be using is often based on what you want to do with it, and also how often you should be actively trading, throughout the week. Are you somebody that's going to be on there for an hour a day, or somebody that's going to be on there for 3 hours a day? It's actually a really good place to start. So what I'd like to do as we now get going is to ask you to get into that question box and ask you, what is your goal for trading? What is the goal? What's the motivation for you? Let's have a little look. I'll give all of you on here on this webinar an opportunity to let me know why you want to trade. And while I also take, I'll tell you what I should do. I should just grab a sip of water. And it'll give me an indication as to what you're really looking for. And maybe I can tailor some of today's contents, really towards what it is that what you're looking at. Okay, I can see financial independence is coming up quite a few times. So is retirement and pension, yeah. A lot of people are wanting their retirement plans to be a little bit more fulfilling, should I say. Always been interested in the markets, autonomy, work from home, Robin, okay, great. Travel, Tom, a bit more freedom. Liam, I want diversification from my current investment portfolio, yeah, that's always good to diversify, certainly a sensible thing to do. Jonathan, I've been running a very successful business for several years and now I've had to shut it because of COVID. We've heard that story before. Now I'm looking for a way not to rely on the economy. I think a lot of people are in the same boat as you, mate. I mean, a lot of people have been looking at how to do things differently. We've all learnt that the world that we were in a few years ago has certainly changed. Sarah, a lot of my friends are trading and doing very well. I feel like I'm the only Muppet who's missing out. Well, I suppose there's a little bit of FOMO, fear of missing out, happening right now. Okay, Rakesh, I'm 80% down on my crypto portfolio and now I'm looking for something more stable. Yeah, a lot of people have been caught in the crypto bubble, and of course a lot of people can't even get their money out of crypto, which is a bit worrying. Binance, which is a crypto exchange, as you're probably aware of, has been banned by most banks. So yeah, definitely something more reliable, I would suggest. There's replace the 9 to 5. Raj, I've got a good job, but I want to do something with my spare time. Do you know what? You don't have to spend all day trading. In fact, if you're spending 10 hours a day looking at a chart, I'd be wondering what you're actually doing. You don't have to spend all day doing this. You can actually do this alongside what you're doing. Absolutely. I want to get better at my trading. Yeah, great. Okay, look, so you've got some great goals here. They're very similar to each other, I will say. Without reading everyone's goals, I can see they're all very similar, which means I think you're in the right place. I think so. Really focusing on how the different things I'll be speaking about today really apply to you, what you just wrote down. It really makes a productive session for everybody on here today. Well, look, let's get stuck into some of the basics. Now, let's start with the currency markets, which we're talking about today. What actually is the currency markets? Well, the currency market is the largest market in the world, right? There are 3 types of market. You've got the stock market. That's where we trade companies like Amazon, Apple, Microsoft. Anyone got Microsoft shares right now? We've got the commodity market. Obviously, that's for gold, oil, silver. And then you've got the currency market. That's where you trade the euro, the Japanese yen, the British pound, Australian dollar. The currency market is basically what makes the world go round. All of you on this webinar right now, for example, are wearing clothes that were probably made in a different country. And at some point, if you've got to purchase them, there would have been a foreign currency transaction at some point. If you had a Starbucks this week, they import their coffee beans. They rely on the currency market for the day-to-day business activities. And obviously, when you go traveling abroad, you pay for your goods in foreign currency. And just to be clear, my career started, this is interesting, by pure serendipity with the largest non-bank foreign exchange provider, Thomas Cook. If you remember Thomas Cook, they recently went into administration actually, but back in the day they were very prolific. They were the largest non-bank FX provider, and they weren't just a travel company, let's just put it that way. And my job started in the IT department, building online trading systems that allowed large companies like Procter & Gamble, to facilitate their international payments. And when you're throwing billions of dollars around in cross-border payments, suddenly the FX rate is a very important consideration for your treasury department. So for some companies, managing the foreign exchange component could be the difference between profit and loss. So the currency markets, it's what makes the world go round. It's what allows countries to do business with each other. And it's very important. It's very large. So what are pips? Well, this is really important. A currency pair that I look at every day, for example, is the pound against the US dollar. So now let's say that the exchange rate for the pound against the dollar is 136. What that means is that £1 will get you $1.36. So Mandy, for example, let's say you're out in New York, you're about to buy your daughter a baseball cap. You know how much it costs in pounds. As a trader, we're more interested in the points. Also, we call those pips. And so £1 equals 1.38. The next two figures, the 38, after the 38, should I say, they're the pips. So it's quoted to 4 decimal places. So it'd be 1.3800. Those 00, those last 2 digits, they're the pips. And what happens is a currency will move up and down by lots of pips throughout the day, throughout the week, and obviously throughout the year. And the best way to think about this is how many of you own a product that is either made by Apple or Samsung? Just give me a yes or no in the chat box. Yeah, pretty much everyone. Now look, Apple shares will go up and down in value throughout the year based on how well the company is performing. What kind of things could cause Apple's share price to go up in value? Have a note in the chat box here. That's right. Yeah, doing well, hitting targets, exceeding projections, doing well as an organisation. Yeah, every single time Apple has released a new iPhone, its share price goes up for 6 months. The only time that's not happened is on 3 separate occasions. So now, what kind of things could cause the Apple share price to go down in value? Yeah, the opposite, exactly. Some products not doing as well as expected, having difficulties expanding into China. Apple's share price goes up and down in value throughout the year based on really how well the company's performing. Now for currencies, you can think of as the country's share price, if you like. So the pound will go up and down in value based on how well the UK economy is doing. When the UK economy is doing well, the pound will generally go up in value. When the UK economy is not doing so well, the pound will generally go down in value. And that's because when our interest rates increase, when we're doing well, you're earning more interest in holding pounds than potentially other countries. So higher interest rates domestically here in the UK will attract an influx of investment in the pound from people overseas. So our job as a trader is to make those predictions. If we expect the pound to go from, say, 136.00 up to, say, 136.25, how many pips has that gone up by? So from 136.00 up to 136.25. Let's see who's paying attention. Yes, you're all saying it, 25 pips. Okay, good. So they are the pips, the 3rd and 4th decimal place, okay? So if it's gone up by, say, 25 pips as a trader, please write this down, we're basically pip collectors. That's what we're trying to do. We're looking to enter, we're looking to exit the market out of the week to collect some pips. The more pips we collect, the more money we make. That's as simple as that. Now, each of those pips will be worth a certain amount of money to you, depending on how much money you're trading with at that time. So in order to trade, by the way, you can open a trading account quite easily these days. Normally you'll put a form of ID, utility bill, and that was dated, say, within the last few months, and you open your trading account, deposit some money in there, and that's the money you're then looking to invest with. So this is a good time to ask the question, how much are you looking to trade with in your trading account? Let's just drop some answers in the box. Now this will be different. There'll be some variance, that's for sure. Let's read some of these out. £5,000 to begin with, £50,000, £1,000, 25k, £2,000 to begin with, 20,000, 80,000, between 5 to 25, Ian, okay, 10,000 euros, £100,000, Miriam, £2,500, $7,000, $45,000, £1,000, £1,500, 5,000 euros, $10,000, Jamie, £50,000, £80,000, 75,000, 23, quite a specific number there, £23,000, £2,000 to begin with, and add £1,000 a month. David, okay, yeah, you can always do that. You can always add more to your trading account. That's quite normal. Yeah, good. Okay, I'm seeing some very normal numbers to what I normally see, although there are a couple of figures that I do want to make a little bit of a comment about. But before I do that, let me just ask, do you give me your permission to be completely honest with you today? Because I thought I'd ask permission first, because if you give me your permission, then no one can be offended if I tell you the truth based on my years of experience. So I'm going to be just completely brutally honest, if that's all right with everyone on the session today. Is that okay with everyone? Thank you. Well, look, yeah, 17,500 pool. Okay, good. There's a couple of figures here that I'm seeing. For example, I see a couple of people have put £50 or £100. Now, look, you tell me, what do you think? What do you think is the problem with starting with £100 in the trading account? Please let me know, because also, by the way, I don't want you to be under the impression that if you put £200 into a trading account, you'll be leaving your job in 6 months' time. Does that make sense? I'm sure there's plenty of people out there on the internet that will say, you know, start with £250 and start making £5,000 a month. Look, I'll leave that to them. Look, here at Learn to Trade, look, you're going to get the zero bullshit approach from me today. So if we can't start with a trust-based relationship, you know, what really have we got? I think all relationships have to be built on trust. And because I'd rather be realistic with you guys, because we're actually going to be building a long-term relationship with many of you on the call today. And also, if you put 100 quid in a trading account, you're not going to treat it very seriously. You may spend more than that just to fill up your car with petrol. So the more skin you put in the game, the more you treat this with respect, the better you're going to be at it. If you treat it like a joke because you've got 50 quid in there and you make £2 on Monday, you're not exactly going to spend half an hour doing it. It doesn't make sense. So I just want to make sure that we are clear. But for a lot of the numbers I see there, they're very, very normal. Now, if you're trading at an average trade size of, let's say, £10 per pip, just to use that as an average, and you collect 25 pips, that would equate to making £250 out of one single trade. And the whole idea behind trading is to be doing that however many times you want throughout the week or the month, depending on what your goals, skill set, of course, what your aspirations are and what your targets are. Now, I'll say this, speaking of targets, how do you create one? And by the way, how many of you would actually like to have some help in creating a plan and creating a target? Because I appreciate all of you are going to have different goals. Some of you are starting with £5,000. They're going to have very different goals to those of you starting with £100,000, and we can certainly help you with that. But just to give you a bit of a basic framework, a lot of people target a certain number of pips a week. Now, I guess a good beginner's target is to collect about 100 pips a week. So if you're collecting 100 pips a week at a trade size of, let's say, £10 per pip as an average, that would equate to making £1,000 a week, which of course is £4,000 a month. Of course, this will be different for all of you depending on the amount that you're trading with and your skill set and your application levels. But if we break that 100 pips down, break that target down, Monday through to Friday, how many pips are we looking at making per day? So let's go to the question box. That's right, 20. 20 a day is your 100 pips for the week. So 5 days a week. Currency markets runs 24 hours a day, 5 days a week. So 20 pips a day is your 100 pips for the week. The question you probably have for me is, did I collect 100 pips this week? And yesterday, did I collect 20 pips yesterday? Well, let's have a look at a recent day in the markets. I've picked one that was about average, so it's a good representation. Just so you know, every single trading day for the last 18 months has been quite exciting because there's been the pound dollar, there's been euro dollar, dollar yen, dollar Swiss. These are the four biggest currency pairs, and these were the highs and lows of what happened. The pound, for example, that moved by 40 pips entirely on its own. Euro dollar, that moved over 40 pips. The yen, that moved 30 odd pips, and the Swiss franc moved again over 30 pips. So what we have here in total is you're basically looking at well over 100 pips of movement in a single day. Now, with that amount of movement, do you think there's 20 pips to be had from that? Yes or no? Back to the question box. Yeah, you're all getting it. Yes, absolutely. What we're not trying to do here is we're not trying to get in right at the bottom and try and pick the top and bank out every single pip. That's really never going to happen. And anyone who's trying to do that is always going to fall short. And I think that's what most amateurs do, in fairness. They try and pick the bottom and try and pick the top. As professionals, we don't look to do that at all. We're looking to grab small bites out in the market, and we look to do it with some cadence, with some frequency every single day. Trading successfully is really a lot more about having discipline than it is about being too greedy. You're never going to make all your money one Friday afternoon, for instance. We don't need to. The market moves every day, and we use every day as an opportunity to work towards our target, and that's pretty much how we do it. Now, a question that we ask ourselves every single day is, how do we know what's going to happen next? And there are really two pieces of information that I use in order to create my trading predictions. By the way, please let me know how many of you are complete beginners here today and how many of you have done some trading before. Please let me know, because over the last 17 years at Learn to Trade, we're getting on for nearly 500,000 people around the world, and we're proud to be the largest and most experienced trader coaching company in the world today. And I have to say, if you are a complete beginner, that is, in my opinion, the best place to start, because there's no bad habits. There's no incorrect information to unlearn. It's always nice to start completely fresh. So if you're a complete beginner here today, you're actually going to find this whole thing much easier, because we don't have to undo a lot of stuff. Often when I train people that have learned things from different places, there's a lot of misinformation that needs to be a little bit unlearned. So if you're completely brand new here today, this is a great fresh launch pad for you, which is very exciting. If you've done some trading before, don't worry, I feel your pain. I've been there myself. But by the way, trading, you can't self-teach. You can't learn yourself. It's not intuitive like riding a bike. When you do ride a bike, the more you do it, the better you get. When it comes to trading, it doesn't matter how long you try and do it on your own, you're never going to get better unless you know certain things. You can't just walk into a hospital with a scalpel and think, well, if I cut that person open a few times, hopefully I'll get better at it. No, if you cut the wrong thing, that person will die. And the same thing is with trading. Let me know if you've experienced this, you've had lots of little winners and you're thinking, yes, I'm going to be the next George Soros. And if you've had that one big loss that's wiped out all of your gains, or you've had a few good months followed by lots of average months, and then 2 years later, you're back to square one. If you've had all of those emotions and the turmoil and the stress, let me know. Let me know if you've experienced any of those things, because if you have, don't worry, we can fix it. Regardless of whether you've been trading before or you're a complete beginner, I think today actually is going to be amazing for you. Now look, there are two pieces of information that I use in order to create a trading prediction. One of them is called technical analysis. You've probably heard of that before, which covers lots of things involved in the charts and the numbers. For example, let's have a look at the charts. We look for trends, we look for price action. We look at the behavior between the buyers and sellers, but visually on the chart. We use little mathematical algorithms and formulas and all that sort of stuff. Also, we look at what we call fundamental analysis. This is where we look at what's happening around the world. So we look at what's happening in every country every day. We look at government policies, interest rate announcements, all the stats, unemployment data, GDP figures, inflation reports, speeches that get made, all those kind of things. So that's really the fundamentals. And the fundamental analysis involves looking at what's happening inside the country. Technical analysis, well, that's really just the numbers, the charts, the pictures. And by combining as much of this information together as we can use that with a fair degree of certainty as to what we think and what we'd like to trade next. And that's pretty much how we do it. So there are a few people involved in this process. Obviously, one person can't exactly do all of that stuff. There's actually a few teams involved in the process. So it starts off, if you will, with researchers. They're the ones that you see, they're in the office first thing in the morning, or on the trading floors first thing in the morning. They're probably the last ones to go home. They look at the charts, the figures, the news, and they try and build that picture up. They pass on whatever's important to the analysts, who would then analyse that information. For example, what does it mean that the Chinese economy is in a bit of an interesting situation at the moment regarding their economy? What does it mean that the UK now knows what Brexit means? What does it mean that President Biden is printing dollars like it's going out of fashion? How is that information going to affect the value of the pound against the dollar today, and then tomorrow, and then next week? See, analysts look at all that information and they create what we call trade ideas. And those ideas of when's a good opportunity to potentially trade, and then that gets passed on to you and I as the traders. So later on today, I'm going to show you my dashboard, and I might see several ideas where I can buy the pound or short the euro or do this or do that, and I'll show it to you as we do it, as we go along. And my job is, out of those ideas, to determine which 2 or 3 do I choose. What it means is that you don't have to be an economist to trade, but what you do need to do is learn the strategies, and that's what I'll be teaching you today. And that really satisfies the 2 types of people that come to do our training. Let me know, by the way, whether you think you fall into the first group or the second group. The first group of people I meet, they love knowing how stuff works. They love knowing all the ins and outs. Sometimes they're engineers, to be honest. They like to really understand how the fears of rising inflation can affect a central bank's decision maybe to increase interest rates and therefore affect the balance sheet of a company or therefore its stock valuation. They just love knowing all of the detail and all of that stuff. They're very detail-orientated people. We also have a lot of clients who are in the second group, and the second group really don't care about that. They say, Greg, I don't really care about the economics. I don't care about the politics either. Just when's a good time to get in? When's a good time to get out? So I can do this every single day alongside my day job and I can build that skill set for myself. Now, let me know what camp you're in, because regardless of which one you're in, you'll know exactly what to do. Okay, great. Now, what does going long or short mean? Brilliant. One of the best things about the currency market is the fact that we can trade through good and bad economic times. If you look at the pound against the dollar, it's quite interesting what's happened over the years. A lot of you will remember this. If you go back to June 2013, very interesting time, because at that point there was $1.48 to the pound. The pound for the next 12 months was fantastic because it just shot up every single month. It was all over the newspapers at the time, if you remember. Our economy was doing really well. It went all the way up to $1.72 a year later in June 2014. So shot up every single month. Now, what's happening here, of course, is the pound is obviously going up in value. Now, if the pound is going up in value, what is happening to the US dollar? Yeah, that's right. It means the dollar's going down. So the pound's going up, that means the dollar's falling. Now, if we expected this to happen over the next couple of hours or days or weeks, what we do in this scenario is we buy the pound against the dollar. That's what we call trading long. So a very important word for you to write down. So just use the terminology. If we expect the pound to go up on Monday, what we say is it's going to go long, for example, 40 pips. And if it goes up, you can make, for example, £10 per pip. So that would be £400. Now, by the way, how many of you would actually like to be shown exactly how to actually place trades? Well, that's getting a lot. That's getting a lot of yeses. Because I remember speaking to a family friend about trading. I was going through some various trading technical concepts. He was like, "That makes sense, but when I'm in front of the computer, what button do I actually press on the screen?" And I forget sometimes people need to be shown not just to trade, but how to actually use the system and navigate it around it as well. So yeah, we're going to do everything with you today, so don't worry. Now, okay, so hold on. Now, is the pound always just going to go up forever? No, that's right. What goes up, obviously, at some point must come down. What happened after June is it came back down to where it started. So if you think it went up for 12 months, within 6 months it came down. When that is happening, that's a great opportunity because that's where the pound was weakening. Now, if the pound's falling in value, what's happening to the US dollar? That's right, that means the dollar's rising. And if we expected that to happen, which one do we want to buy instead? Okay, you're getting it. That's right, we buy the US dollar, we sell the pound, so effectively we do the opposite. By selling the pound and buying the dollar, that is what we call trading short. Another important word for you to write down in your notes is that shorting means we're expecting that currency to go down. And if we're in a downturn, we can short it for 40 pips instead. So we can make money as a trader. We can trade in both directions. Now, is it useful to be able to trade in both directions? Yes or no? Yes, absolutely, because it means our skill set is recession proof. It doesn't matter what happens out there in the economy because our skill set is unaffected, which I think is very useful for a lot of people in this country right now. Earlier on, I asked you to write down why you want to trade. And I noticed people put a lot more financial security and a lot more stability, especially right now, because, you know, how is the British economy doing right now? Some animated results. Yeah, not that great, not great at all. And a lot of people are getting quite concerned and also very frustrated. Where's the economy heading? What's going to happen now that we've left the European Union? How is this global pandemic going to last and affect my retirement, my future prospects, my livelihood? You know, a lot of people are getting very frustrated, especially because the rest of the world is not giving people a lot of confidence either. If you look at the European economy, that's got its own concerns. People are nervous about rising inflation in the US. Oil prices are very volatile, affecting all the oil-producing countries in the world. And right now, the global economy is in quite a big mess. And that's why people are looking to really retake their own security into their own hands, because ultimately, who's the only person that can control your future in the first place? Correct, you. And that's why people want to have a backup plan, a safety net. People want at least a skill set that is not tied to the economy that they're living in, because one thing people do not want to do is to leave their entire future in the hands of their boss, and they don't want to rely on the government either. So people want to have that control themselves, more so now than ever before. And that's why people come to us now, because people are worried about what's happening out there. Because if we did go into a global recession, and by the way, do you think we could be in a global recession? Lots of yeses. Yeah, it's already starting. We actually have more opportunities anyway. We have more opportunities. We have a saying, it's the markets tend to go up by the stairs, but they jump out of the window, or they go down by the elevator, because markets fall 3 times faster on average than they rise. And that's why during recessions, we see 3 times more opportunities. There's a reason why during the Brexit night, the pound fell 2,000 pips in one evening. How many of you caught that or saw that? How many were trading it? Well, there's a few on you were. Well, you could have. Look, this is not reserved for just a few thousand traders in those tall buildings in Canary Wharf and Wall Street. I think the teenagers on the Reddit forums have proved that not to be the case. And look, you can do it too. The most important thing is you can do this. Were we taught financial skills at school? No. Well, what were we taught at school? Yes. Yeah. It's amazing. Many of you are saying exactly the same phrase, get a job. Exactly, get a job. And maybe one day try and be a bit entrepreneurial, maybe try and start a business. Those things are great when the economy is doing well. But what about when the economy is not doing so well? What are we taught to do then? Yes, hope, wait. Yeah, hope and wait. And does that work? Well, let me ask you a question. How long do you think it would take for the UK economy to get back to where it needs to be? Interesting to hear your answers to that, actually. So I'll give all 159 of you an opportunity to let me know. Do you know what? A lot of you are really thinking along the same lines as me. Although Sam, I'm going to read yours out. Sam has put 6 months. Sam, if everyone in the country had the same level of optimism that you have, I think we could probably hit it in 6 months. Sadly, I don't think people are sharing that. I think realistically, we're looking at least 5 years, even 10 years perhaps. How many of you can wait 5 years? Lots of obviously no, now. Yeah, obviously not. Look, but you don't need to, because right now, interestingly, is an amazing place to be. Now, some of you might not realise that, but right now is such a great time to be alive, and it's important to understand why. Youngsters, they're not taught how the world works at school particularly, and that's why at a time like this, it's only wealthy and the fortunate that are getting wealthier, whilst everyone else is staying the same, if not getting worse. What is it that these people know about this time period that other people don't? Let me explain how they look at the world. Let me ask you a question. When it rains outside, is that a good thing or is that a bad thing? Let's have a look at your perceptions. Lots of bads. Well, look, it's actually a good thing. Rain is an essential part of the environmental cycle. When it rains outside, we know everything's working properly. If you're a farmer, you certainly need it to rain. And look, let's just compare that to this world. So when the market crashes, is that a good thing or a bad thing? Again, we're getting lots of bads. It's actually a good thing. A crash is an essential part of the economic cycle. It's very normal and a very natural process. No market goes up forever in a straight line. Markets go up for a while, then they plummet, then they grow for another 5 or 10 years, and they plummet again. In economics, they're not called crashes, they're called corrections. It's just like the market is resetting itself. So when you reset your phone or reset your computer, it runs more efficiently. And when we're in that same time period, we're lucky to be in at this time, because that's where the growth opportunities are. That's why we're so lucky to be where we are right now, because people always feel like they miss out on times like this when you're a few years in the future. If you go back 20 years ago, for those of you who remember the dot-com crash that happened, people said, God, I wish I was trading back then. I've really missed out. The same thing happened in 2008. If you remember the GFC, the global financial crisis, people said, God, I wish I was trading back then. I missed out on that as well. So when do you think is the best time for you to start trading? Let's have a look. Well, now, exactly. Because what kind of things do you think you've got coming up next? Exactly. Everything you actually already know about COVID and the after effects, which is going to be absolutely enormous. Brexit, a new US president who, by the way, is not wasting time doing things slightly controversially, let's put it that way. We love the fact he's printing US dollars. He can print as much currency as he wants. That creates fantastic opportunities for us. Also, I don't know what's happening in the Middle East with him, but so much uncertainty that gets created, which of course affects commodities, it affects currencies, which creates opportunities. So it doesn't really matter what actually happens next. It's the creation of opportunities. A US and Chinese trade war, which by the way, is going to absolutely explode. And you're going to have huge stock market corrections. You have a look right now at the S&P 500 or look at the NASDAQ right now. Tell me whether you think it's overvalued or undervalued right now. Yes, it is overvalued. So look, there's not going to be a surprise that we're going to see a big fall off in equities. That's imminent, especially with the fact that we've got rising interest rates coming up. We're going to see the prices drop. So all of those things are contributing towards really exciting opportunities. This is a great time to be starting in the markets. I mean, it reminds me of the time when I started. And that's why, without you even knowing it, you're choosing a brilliant time to start, which also forms a basis of this project I'm running that I mentioned at the beginning. As I mentioned, I'm actually going to take a group of you from this webinar today. I'm actually looking for some participants to take part in something that we're calling the UK Lifestyle Trader Challenge. So actually what we're going to do, it's going to take a group of you from this webinar, and we want to document how long it would take you to get your skill set from where it is right now to really where you want it to be. Okay, we're going to document that journey and also have a little bit of fun with it as well. You're going to have access to all the tools. You'll have access to smart charts, and you'll also be assigned one of my traders as a one-to-one mentor, so they can check how you're doing. Now, how many of you, by the way, would actually like to take part in that project? Let's have a look. Oh, lots of interest. Great. Well, all of a sudden, it looks like everyone's woken up. I don't think I've had a better response to any question I've asked so far. So, oh, you're still going. Okay, great. Well, that's a lot of you. Well, look, there are going to be some requirements to be involved that I need you to stick to be part of that project. I'm not going to make it totally easy for you, but because you might imagine there are some things we're looking for in return. So we're looking for someone who's very motivated, is very driven, someone that knows that, but by the end of the year, they want to be in a very different position. So we're looking for the right kind of personality as opposed to someone that just wants to have a dabble here or there. So it certainly will open the doors to most of you in this webinar today. I'm going to put it to you that way. And the reason why I say that is because I'm going to be completely transparent with you. The kind of clientele that normally partake in our training are people that have a lot of money to invest, a lot of money to put into a trading account, and plenty of money to throw at their education. Again, that's why trading, unfortunately, is seen as an activity that's particularly reserved for the wealthy and the fortunate. And that connotation, I know, has been around for decades. However, for the purpose of what I'm doing here today, I'm actually going to be lowering that barrier of entry so you can actually start almost immediately. And I'll be explaining to you later on exactly how I'm doing that. But put it this way, if you consider yourself to be of average financial means here in the UK, this is going to be an easy opportunity for you. You certainly don't have to be a wealthy individual to take part in what I'm going to be doing today. If you're a normal average person here in the UK, this is going to be pretty straightforward. In fact, because it's such an exciting time, the more doom and gloom that's out there in the economy, the more opportunity it creates for the trader. So the more challenging things are, the more opportunity it creates. I really need you to grasp that. Speaking of challenge, if you look at what's happening around the world right now, how many of you recognize that the worst is over? And how many of you think the worst is still to come? Let's have a look. Ah, George, you found the chat box. Well done. By the way, if you're outside of the UK, you can still take part. It's the UK team that's heading this up, hence why it's called the UK Challenge. Yeah, the worst is still to come. Nothing's happened. Yeah. Nothing's happened. Well, a lot of people thought last year was bad, and actually, when you look at it, it wasn't at all, because there was no government assistance. For example, the furlough scheme. Don't if you consider last year, it was, don't worry about your salaries, we'll pay for that. Your business needs a loan, here's 50 grand, it'll be in your account in 24 hours. You can't pay your mortgage, oh, don't worry about it, you can pay later. Government gave a lot of support. We're going to pay that back, but they gave us a lot of support. Now, do you think that support is going to last forever? No, it's not. Do you think the government is going to want to ask for that money back? Well, they've already started, haven't they? We've already seen tax increase. So you're gonna see hikes you're gonna see tax rates hike up, because they're definitely going to be asking for that money back, and they're going to definitely profit out of the situation. And who's going to have to pay that money back? Yes, us. Yes, exactly. Yeah, the average person's going to be getting hit the most. It's not going to be your Jeff Bezos of the world that's going to be paying that back. It's the average hardworking person that cannot and is getting pushed into a corner. Unfortunately, that is going to create a lot of turmoil for a lot of people over the next 2 to 3 years. And let me tell you this, for a trader, that's Christmas. The more challenging things are, the more you read the headlines. And by the way, the media, they love making things scary, don't they? Because that's what sells. They love creating fear. That is the golden ticket, by the way, for a trader, because the more fear, the more doom and gloom. The Middle East, printing money, this, that, and the other, they create fantastic opportunities. So that's why right now is a brilliant time, because rather than just being sat on the sidelines watching all of those things happen, you're actually going to have the opportunity to be involved and knowing exactly what to do. So we're going to document how long it's going to take you to get your skill set from where it is maybe right now to really where you want to be as part of this UK Lifestyle Trader Challenge. And I'll tell you a little bit more about that as we get into the session. Okay, so how do we read these charts? Now, currency market, by the way, it's a simple market to understand, because there's only two things that cause a currency to move. And those two things are fear and greed. And by the way, take a moment to appreciate my choice of imagery here. I'm quite proud of myself when I came up with this slide. Let me know if you appreciate my choices. Really, really simple. When a country is doing well, people and governments, they love investing into those countries. And as a result, the currency goes up in value. When it comes to it's not doing very well, well, investors leave, assets get sold off, and the currency devalues. It's all called economic sentiment. Now, how confident does the global economy feel about investing in that country right now? And that's why analysts are all over it. Every single day, they look at the charts, the news, politics, they look at what's happening in every country and look at those trade ideas. For example, one of the things we analysed is the chart. Now, however, what we do not do is we do not look at line graphs. We look at these funny looking things which are called OHLC bars, which stands for open, high, low, and close. Candlesticks are exactly the same thing. They're just represented differently. You can use either one. Now let's say this is the daily chart for the euro dollar. It's showing us that the euro dollar has gone up on Monday, hence why it's green. It's gone down on Tuesday, hence why it's red. Now, how would we use this information to help us predict what's going to happen next? Well, look, let me show you. Now let's say you see the euro dollar go up on Monday. Now, if you saw that happen, you might think, oh, that's interesting. It's going up. You might see it go up on Tuesday. You might also see it go up on Wednesday. Now, when someone sees this kind of thing happen, they're thinking the euro's going up. That must mean people are buying it. Now, if everyone else is buying the euro, maybe I should too. And that's where that herd psychology begins. And most people look for that social proof before they enter a trade. If all my friends are buying shares in Tesla, maybe I should too. Well, now, if they see it go up again on Thursday, it just reinforces that belief. They start thinking, you know what? I had a feeling inside me that it's going to go up on Thursday, and it has done. So I might as well get in. And I think that's an important distinction, because that's when most amateurs do get in. They always seem to get in when it's always too, yes, Mike, late. Exactly, I can see your comments. Always when it's too late. And we certainly would not want to do that in this example. The reason why is because of what the chart is telling us. How do you know? Now listen, watch closely. Do you notice how the fourth bar is a different shape to the first three? Yeah, exactly. Yeah, different shapes mean different things. Look on Monday. The price opens there in the morning. It's coming down here low. Gradually, it's going up here to the high point. However, did the price close anywhere near the top of the bar by the end of the day? No, it's dropped, hasn't it? It's come back down to where it started. Okay. So what's happened on Thursday that did not happen on the first 3 days? That's right, it's fallen, it's come back down. It's come back down on Thursday. Look, on Monday, the buyers pushed the price up and it stayed up, hence why the buyers won. Tuesday, the buyers pushed the price up, stayed up, buyers won again. Wednesday, the buyers pushed the price up, it stayed up. And when I say it stayed up, the closing price stayed up, buyers won again. Thursday, the buyers pushed the price up. However, though, by the end of the day, where that closing bar is, the sellers brought it all the way back down. So really, the sellers won. So on Thursday, the price remains green by the sellers who are pushing price back down by the end of the day, despite it being a green bar. So the sellers have kind of won, but it's still effectively a green bar because it opened a little bit lower than where it ended up closing. It's still a green bar. So which way do you think the price could go on Friday? Yes, that's right. It could go down. The chart could look like this. Now, do you think it's useful to know when that's about to happen? Yeah, that's kind of the whole point. Had you been on the trade on Tuesday morning, and by the way, you're going to be learning the same strategies that I use every day. So the same technical setups I look at, you're going to have this. I'll show you how it works. So let's say there's a good buying opportunity on Tuesday morning because there's a good technical setup. Now, on Thursday, my analysts will have noticed a big change in direction, as you would have now. And that will highlight yourself as a good idea to get out and to sell. So rather than target the original 140 pips that we were going to target, what we do is instead we close that early, we bank the 70 pips that we've made so far, rather than wait a couple of days later and sit there at a loss. And that is how you can start to use these strategies to start banking those pips, okay? Now, let's say you bank over 70 pips at £5 per pip. That's 350 quid. Now you could do that a couple of times a week. That's £3 a month. And the most important thing is, look, you can learn how to do this. Hopefully the way I've started to explain there, you're sat there thinking, you know what? That starts to make a lot of sense. There's absolutely no reason why you can't learn this too. And there's certain sayings we have. One of my favorite sayings is always, trade what we see, not how we think or feel. Because does the market really care how we think or feel? No, lots of animated results. No, it doesn't. You might feel like it's going to be really sunny tomorrow, but the clouds are quite dark and there are quite a few low down later on in the evening. Chances are it's probably going to rain. It's what we call forecasting. And you're going to learn how to forecast the market using the same strategies that we use every single day. Now look, as I mentioned, different shapes really do mean different things. And that shape here on Thursday, it means that the large banks have entered the market because the banks, this is the interbank market, this is really where the majority of the currency volume is. They're the only people who are big enough to change the direction of that currency in such a short space of time. Remember, it moved in that bar, didn't it? It takes a lot to move the currency in such a great space, in such a small period of time. Think about it. People and companies are currently transferring about $6.6 trillion throughout the world every single day. To put that into context, the UK current GDP annual UK gross production, is about $2 trillion. The currency market, therefore, does 3 times that in one single day. And that's a lot of money. The only people that really are big enough to move that in large chunks are certainly not private investors or individual traders. It's the large banks. And the only people who are big enough to move it in large quantities is the interbank market. So when we see that's happened, we know how the large banks have obviously made some very large transactions in a very short space of time. And that's useful information for us. And it forms the basis of the first structure of our great topic. So when the price is gradual, for example, falling and it's falling and it's falling, but then reverses and goes all the way back up to where it started, that's not random. That's the banks getting in. This is what we call a T wave buying pattern. It's called a T-wave buying pattern. Now this is an example, please write this down, of one of the patterns. There are 10 different patterns that I look at. Now they're all very different shapes, sizes, colours. Some are complex, some are easy to look at, but they're all very different. They're all based on certain behavioural elements in the market between interactions between institutions, buyers and sellers, and they all represent unique opportunities. So I guess let me ask you a question. Do you think it'd be quite useful if there's a piece of software that could be programmed to find these patterns based on parameters that we can program into the software's filters to actually find these opportunities and then flag them to us in a visual way? Do you think that would be quite useful? Yeah, exactly. You're all saying it. It would be very useful. Just keep that thought in the back of your mind for a minute. Now let's talk about this T-wave. Now for those of you who I'm taking on to this Lifestyle Trader Challenge, this is one strategy I want you to absolutely nail. So we're going to spend a lot of time concentrating on how the strategy works. Just so you know, there's quite a few steps involved in the strategy. It does take a good 2.5, even 3 hours to actually teach this strategy in its entirety. And obviously, I don't have enough time today to go through everything, but we're going to do that on the actual training itself. So I know some of you will be doing the training in about a week or a week or two's time. Some of you are on already. Some of you will be doing that in a few weeks. But what I'm going to do later on is I'm going to show you some dates, and you can choose which one you want to do. And we're going to go through everything in a lot of detail on those actual dates themselves. Okay. So now, basically, markets are like people. Okay, they breathe. Markets breathe out and they breathe in. They breathe out and they breathe in. They breathe out and they breathe in. We call this cyclicity. Now, we're in an uptrend here, okay, and we're looking mainly for buying opportunities. We would have traded with the momentum when we're trading with the banks, not against them. Don't swim head on against the current. Want to be with the momentum. Now, seeing as we're looking for buying opportunities, please tell me, looking at this, when do you think would be the right time to get into the trend? Look at the two numbers. Would it be position number 1? Or would it be position number 2? Remember, we're looking for buying opportunities. We're looking to take advantage of an upwards movement. So when do you think would be the best time to enter the trade? Okay, majority of you are saying 1. There's a few 2s. Okay, look, obviously the position... Obviously, position number 1 is the answer we're looking for. Now, ideally, we'd love to get in at the bottom at number 1 and then get out at the top, which is number 2. We'd love to re-enter at the turning point 1 and get out at number 2. We'd love to get back in at the bottom and get back out at the top at number 2. However, how many of you think that is a realistic thing to actually try and do? Yeah. Yeah. Yeah, no, obviously not. But what we can do with the T-wave is we can get in at number 1 and then we can get out and grab a little bite at the market. We can get in at number 1 and we can get out like a little 30 pips. We can get in at number 1, get out and take a little chunk out of the market. And that is what we can do, okay? So how many of you are looking to just take regular bites out of the market day in, day out? How many of you would be okay with that? Okay, good. How many of you wouldn't be too disappointed that you never got out right at the top? How many would you be okay with that? Back to that question box. Great, okay, good. That shows me I'm actually speaking to a very rational group of people today, because guess what? And you know what? You're never going to get out at the top. When you realise that, you can actually start doing this properly. There's no point trying to chase what I would call an unreachable goal. Does that make sense? Now, when do you think, given what I've said, when most amateurs get in? Yeah, the word I'm seeing from about 60 of you, at least it must be, is at the top. That's exactly right. They always do that, don't they? Amateurs always get in near the top. That's right. It's because they don't know what they're doing. They're self-educated. And you know what? They take too long to make a decision. They're not informed. So what they do is they sit there just watching the chart and they wait to see it move up first. That's the problem. And then when they see it move up, they start thinking, well, okay, it looks like it's going up, but I just want to be really sure. So I'm going to wait a little bit longer and see if it'll go up a little bit more. And so I'll wait a little bit and a little bit longer. And then when I see it go up, I'm thinking, oh, yeah, okay, it's definitely going up. I think I'll get in now. And they're getting in about 3/4 of the way to the top. 3 days later, they're lost. And they'll repeat that same pattern, interestingly enough, over and over. My favourite time to trade is between the hours of 6 in the morning and 8 o'clock in the morning. That's UK time, generally GMT time. It's my favourite time of the day for trading. I wake up just after 5 o'clock every day. I do the usual Facebook, grab a shower, as we all do, and then I get myself ready for about a 6 o'clock start, sometimes a little bit before that, but normally about around the 6 o'clock mark. Let me ask you guys, how many of you are available between 6 and 8 o'clock in the morning, or could be prepared to give it that time? Because that is the action time. Let's have a little look. Someone's like, no way. But most of you are saying, well, yeah, pretty much the vast majority of you are saying, yes, that's the magic time. And that's a lot of you. So we can do it together. And by the way, why do you think traders love trading first thing in the morning? Well, there's a pattern. There's really a pattern here, isn't it? Wealthy people tend to get up early in the morning. Why do traders love trading first thing in the morning? You got it, John. That's right. It's the European session. It's the start of the European session. So European countries are waking up. They're obviously an hour ahead of us. We're fresh and alert as well. And also, it's a good time to be productive. How many of you liked the idea, or how many would you like the idea of being done and dusted by 7:30, 7:45 in the morning, and then have the rest of the day to yourself? Bring it on, says Joe. Yeah, exactly. It's not a bad way to organise your day. You can finish trading, go continue on your working day, or run the businesses that you run, and you can get your productiveness done in the morning and then carry on with your business day. It's just a nice time to be productive, and it's when the banks are in, and it's where the volatility is, and it's where the movement in the market is. Now, how many of you are not available between the hours of 6 and 8 o'clock in the morning? Okay, so for those of you who are not available, there's a few of you aren't actually, there are 5 other times of the day that are good to trade. They're quite specific times of the day, and there's quite a few things we need to elaborate on regarding those times, but we're going to do that in greater detail in the training itself. But if you're not available in the morning, don't worry. We're going to design something that you can use as well. So what we're looking for at certain times of the day is certain formations, certain shapes. Now, here's the good news for you. You don't have to find these shapes or these formations yourself. The tool I use to find these setups and the shapes or the formations, for me, is called Smart Charts. It's used by thousands, literally thousands of Learn to Trade graduates and professional traders alike around the world. Smart Charts has a recognition tool built into it. It's based on algorithms that we've refined and tested for many years, which have been programmed in to do really a lot of the donkey work. It's an amazing tool, and I'll show you a little bit how it works later on, but essentially it flags things to us. So at certain times of the day, certain events occur. Now, one thing that you're going to want to learn, and please write this down, is that when is the optimum time to put your entry point, to place your entry? At what point should you enter the market? Because timing is key. Please write that down. The entry point is crucial and critical. And where do you put that? Well, we're going to go through that on the training itself based on the various patterns and the various formations that we're going to be targeting. Another thing that you're going to want to learn about is where to put your stop loss. So there's the entry price where you get in, and that is specific and it's time-based. A stop loss is an automatic safety net in case it goes the other way, in case the position doesn't go the way you want it to go. You can think of that like an automatic emergency cutoff so you don't take further losses. And here's the thing, the stop loss shouldn't be too close to your entry either. It shouldn't be too far away either. And that's a mistake that a lot of amateurs make. Placement of the stop loss is obviously critical. There's an optimum distance where that stop loss should be. And that's based on certain currency pairs. We'll spend a lot of time and energy finding out what the perfect sweet spot for those currencies is. We're going to be sharing that with you. We'll go into that in a lot of detail on the trading. Another thing that you're going to learn is how to take a profit and where the optimum profit level is. That's where we're exiting the trade and then we're cashing out and then we're banking the profit. Now, at certain times throughout the day, there are certain events that happen in the markets because of things that are happening in the real world. And you can learn exactly when is a good time to put your entry timing, how to protect yourself for maximum capital preservation, also where to put your exit and take profit level. Now, by the way, how many of you so far are finding this quite interesting? Let me have a quick look. Oh, that's very sweet, Janine. Thank you. Lots of big hearts and love. Thank you very much. I think this is really fascinating. And also, please let me know, has anyone ever shown you how to trade in this type of fashion or format before? Adrian, thank you for the mega comment. I really appreciate that. Well, look, for most people, it's a no, because this is the professional way. The only way you'll know how to do it is to be taught by a professional trader. I hope that makes sense. The only way you're actually going to grasp this is when you have an experienced, properly trained trader who's showing you what to do. Because, look, a book is not going to do that. A book is just theory. You read it, but it doesn't give you the approach. And then when you watch a video, and yes, you can get some great information, the only thing about a video is you're missing the all-important, what I think, the all-important feedback. It's good to watch, but what do I do now? A video can't tell you if what you just did was right or wrong. The only way to actually learn this, like I did all those years ago, sitting on trading floors around the world, is when you're with a trader in the market being shown in context to what's happening now. That's when we do this, and then when we do that, when we do this, and that's how we learn, because we're doing it in context to the live market. That's how I learn with real traders on real trading floor where trillions moved every day. It's very, very important to learn something in context because you see how it's in reference to the environment it's in. Now, the lovely thing here is that once we set the trade up, you can then close your laptop and carry on with the rest of your day, because once the price hits the targets, it will automatically close the trade. So the target is automated, and so is your stop loss as well. So once we set the trade up, we can and should, by the way, walk away and take advantage of that burst of movement. So the next day, same process. We set up a trade, we set your alarm, go through the steps. If the trigger is there, you pull the trigger and we bank a little 30 pips out of the market. Next day again, 5:45, out of bed, go to the markets, go through the scanner, have a look at the markets. Same thing the next day. And the reason why this strategy works so well is because what happens is when the banks enter and exit and re-enter and exit, it causes kind of a zigzag pattern to emerge on the screen. And the reason why we see these patterns is quite simple, because the chart is a visual representation, effectively, of human behavior. And there's only two groups of humans here, and these really are simply just buyers and sellers. That's it. Now, whilst it's difficult to predict one person's behavior, people in very large numbers become predictable. And because human behavior is predictable, markets become predictable. And that's why the strategy works. Now, what I'm going to do is I'm going to play you a video of me using the strategy. Look, it's very old-fashioned software, but don't worry, the principle is the same. I don't use old-fashioned software anymore, obviously, but I'm going to show it to you anyway. I'm trading the pound against the US dollar. I'm targeting 22 pips of profit on this trade. The trade I was trading is approximately £45 a pip. So if every pip goes up, £45 are made. Hence why the target is to make £1,000. Now, to put it in perspective, if you were taking the straight £10 a pip, and you'd make 220 quid, because you're targeting 22 pips at £10 a pip. Going for a little bit more here, £45 a pip will make me close to £1,000. So have a watch, make some notes, and then I'll elaborate. I'm going to trade the pound against the US dollar using the T-wave strategy, using old screens for a reason. Have a little watch. So in this video, I'm going to show you step by step how you can identify and place an income wave style trade at 2% risk using a traditional trading platform. Firstly, we need to search through the list of currencies on the left-hand side here, one by one, until we eventually find a trading opportunity on the chart.
Now this could take around 15 minutes, but to save time here, I've already gone through the list and I found us a great income wave setup on pound versus dollar. Now we want our buy entry at the top of this bar and the stop loss at the bottom. So the first thing we need to know are the values of the high and the low of this bar here. And to get this information, we simply hover our cursor over it, and now you can see the information I need highlighted at the bottom of the screen. The high of the bar is 1.32125 and the low of the bar is 1.31905. So our buy entry level is going to be the same as the high and the stop loss level is going to be the same as the low. We only count to 4 decimal places on dollar-based pairs, so we can see there is 22 pips between the buy entry and stop loss. We're going to make this a 1-to-1, therefore our take profit will need to be 22 pips above the buy entry, so add 22 pips to 1.32125 and you get 1.32345. Okay, so we've got our buy entry, take profit and stop loss levels. We now need to work out our risk size for the trade. The risk management calculation is 2% of our account divided by the number of pips at risk. That's 2% of the £50,000 account size is going to be £1,000 of risk on the trade. However, you can't just put in £1,000 of risk into the software. We must enter the number of pounds we want to risk per pip. And to work this out, we divide £1,000 by 22 pips. We have 1,000 divided by the 22 pips. And that's going to be £45 and 45 pence per pip. Okay, so we now have our buy entry, stop loss, take profit levels, and our risk, which is £45 and 45 pence per pip. Now we're going to go to trading. Choose new order. We're going to copy the information on the left into the order ticket. First, it's a pending order. Now the broker needs volume or risk size amounts to the nearest 10p. So instead of £45 and 45 pence per pip, I need to round it down to £45 and 40 pence here. I'll quickly input the buy entry level in here and then my stop loss and take profit in here. It's an income wave trading opportunity. I can now go ahead and click on the place order button and the order's been placed. It's been successful. Here is the buy entry, here is the stop loss, and here is the take profit. As you can see, the price eventually moved in our favour and this trade was a winner. Thank you for watching, and I hope you found this demonstration interesting.
Okay, nice. A nice little trade to show you that. Now, was that a nice, easy trade to follow? Let me see what you think. Yeah, a lot of numbers, and that was only a few of the steps, which is why, by the way, we do it together, which also suits most people's learning style. Some people are visual learners, they really understand when they see things. Some people are auditory learners, they need to really hear it. And some people are kinesthetic learners. They're the ones that actually need to be shown exactly and actually how to do it. That's certainly me, for example. So once you sit next to me and you show me what to do, I can do it. How many of you are the same? Lots of exclamation marks. Me. Yeah, well, especially when it comes to practical things. That's why from today, when you participate in the trading challenge that I mentioned earlier, each of you will be assigned one of my traders to be your one-to-one mentor. So you can actually check what you're doing to make sure you're doing things properly, which really helps, okay? Now, I mentioned earlier on how it'd be pretty useful if there's a piece of software, instead of the example you just saw, but a piece of software that would actually scan the markets based on certain algorithmic patterns and actually highlight the trades to us. Well, here's the cool thing. Smart Charts has a PRT. A PRT is a pattern recognition tool. So essentially, it scans the market based on certain variables that we have had programmed into it. It's like having an experienced trader finding and bringing you opportunities. It's pretty cool. Let me show you exactly how it works. Have a look at this. This is the euro against the US dollar, and we're looking right now, it's just simply a blank chart of the euro dollar. There's no visual aids turned on. You can see it's kind of going up and going down. When you get in, when did you get out? Now, obviously, in hindsight, that's easy, isn't it? It's easy to say in hindsight, although I would have, you could say I would have gotten in here and I would have gotten out right at the top, but we can't trade in hindsight in real life, can we? That's like saying I would have picked those winning lottery numbers. Well, now check this out. if I turn the visual aids on, can you now see a number of little blue arrows on the screen? Give me a yes or no on that. Okay, good, you're all getting it. Yeah, lots and lots of yeses, lovely. Now check this out. Have a look at that first blue arrow. Look at the bar immediately to the left of it. Now does that little bar look like a familiar shape? You might have to look quite closely. The little familiar shape we've just been talking about. Yes, it does. And have a look at the second blue arrow. Look at the bar just to the left of the second blue arrow. Have a look at the third blue arrow. Look at the bar again, just to the left of it. Do they all look like a familiar shape? Yeah, I'm getting lots of yeses. Yeah, it does. So every time certain patterns are found, Smart Charts flags it to our attention so we can go straight to that moment of interest. How cool is that? And also, by the way, you'll see, so you don't have to waste time looking at stuff that's just not happening. That's the most important thing. It's saving you a lot of grunt time by highlighting the opportunities so you don't have to go scouring for them. And you'll also notice a blue, a red, and a green dot. Now, what do you think the blue, the red, and the green dot mean? Peter's on it very quickly. Yes, entry, stop, and target. That's exactly right. The blue dot shows you where you could enter. The red dot shows you where you would put your stop loss. And the green dot shows you where you can take your profit. And they're all different in size because it's also done on all the risk-reward calculations based on the range size and so on. So please write this down. Every single trade is different to the next. And the reason why the distances are different between the stop loss, for example, and the entry price, is because Smart Charts has an algorithm built into it which will use recent volatility to adjust the target and stop loss to be in the most efficient place. So let me repeat that again. Smart Charts has an algorithm built into it that will use recent volatility to adjust the stop loss and the target to be in the most effective and efficient place. You got that? Great. Now, if you don't quite understand that, don't worry. It's really good. For those of you who have done some trading before, please let me know how much better your trading would have been had you had a feature like that. I mean, for most traders, this is a total game changer. Great. Thank you. Thank you. Thank you. Have a look at this. CAD, that's Canadian dollar, against the Japanese yen. Now, blank chart looks a bit confusing. Visual aids, so much easier. Pound against the Japanese yen. Here's what the blank chart looks like. Visual aids, you'd go straight to the moment of interest. By the way, do you prefer it with visual aids turned off or do you prefer it with visual aids turned on? Yeah, silly question. Much easier. And you'll also notice some downwards pointing arrows as well. What do you think the downwards pointing arrows mean? That's right, Amy, you've got it. Shorts, it's shorting opportunity. The downwards pointing arrow mean that we can trade in the opposite direction. Same pattern, but it's inverted. And by the way, this is going to save you a lot of man hours. Let me tell you that. Let me explain why. Let me get my calculator tool out. And so to do this manually, let's just go through. So let me explain to you what you'd have to do to try and do this on your own. Well, firstly, you'll have to look at 28 currency pairs. Within each pair, with the weekly chart, the daily, 4 hour, the 1 hour, the 30, the 15, and the 5. So we look at all the different currency pairs and 7 different time frames per currency pair. So it's 28 different currency pairs multiplied by 7. So you've got to look at 196 charts. Now, how long would the average person have to try and spend looking at 10 different patterns on each of those charts? Well, if you're really quick, maybe 7 minutes. Okay, times that by 7. Now you tell me how many of you have 22 hours a day to stare at charts, trying to find all of those formations, all of those shapes. Now, no one's got that time. And here's the point. Even if you did have that time, by the time you found something, the market's already moved, so you're too late to the party anyway. So as pros, we don't waste time doing things that technology does much quicker. We focus our precious time doing the important things, and that, of course, is making decisions. Let the computer do the boring stuff. Smart Charts does in excess of 90%. We do the 10%, but that 10% is what makes all the difference. And also, by the way, let me just say there are a few things I'm going to ask of some of you. How many of you, as part of this kind of whole lifestyle trader challenge, how many of you would be prepared once a month just for the next couple of months to take some screenshots of the trades that you've personally placed in smart charts and email them directly to me or my team. How many of you would be prepared to do that? Let's just see. Great. Okay, thank you. I really appreciate that because you're all coming back saying you're up for that. And I want accountability. I really appreciate it because you might actually find that some of your trades may be featured, should I say, on one of my future YouTube videos. If you don't know, I've got quite a big YouTube channel. So that's going to be awesome. Also great. So also, because we're very excited about launching this project, how many of you are up for learning about trading gold and silver as well? Great, because every single person that's part of the Lifestyle Trader channel is going to be able to overlay those strategies on gold and silver as well. So please let me know why it's important, do you think, to know about gold and silver, particularly at a time like this. And if you don't know the answer, that's even more of a reason why you need to actually get involved. Look, right now, very, very exciting times for those commodities. Right, now this is a really important part of the web class. These are my 4 golden rules for trading. And whilst they look simple, please trust me when I say that these simple rules are the reward from, let me tell you, many years of trial and error. Follow these and you can skip over a lot of the learning that kills off a lot of the beginners. So please note these down. And look, my first golden rule is that I always trade what I see, not what I think or feel. I am pretty rigid with my processes, right? And I have processes and that's just what I stick to. We ignore the beginners. I've got a good feeling about this thing. We put aside emotion and instead follow logic, maths and economics. And that's a process. And that's what we do here. And that's when it comes to understanding the markets. It's critical that we follow that step for rule number 1. Second golden rule is I never risk any more than 1 to 2% of the money that's in my trading account on any one particular trade. The reason why is it keeps the emotions away and it keeps the risk very low. I'm not going to lose any sleep whatsoever if I'm just risking 2% of the money that's in my trading account on any one trade. Let me know, by the way, if you're quite a low risk person. I like to keep my money. Okay, good, great. Well, look, we're in the same camp. Rule number 3 is I aim for a minimum of a 1-to-1 reward, to 1-to-1 reward risk ratio, should I say, in the trade or higher. So look, a lot of trades right now that I'm in or I'm looking to get in are 3-to-1s, 4-to-1s, but as a minimum, I look for a minimum 1-to-1. I've at least got to get back what I'm risking. And better yet, 2-to-1 or 3-to-1 is even more important. Rule 4 is pretty simple, but it's important, and it's to follow rule number 1. And rule number 4 says, hey, reread rule number 1, and that's really, really important. A lot of people like to feel like the markets are one big casino. They get that real buzz. Pros view trading as a business. This, for us, is a business. It's where we make our money. It's where we follow our processes, and it's where we repeat the same thing pretty much on a daily basis. We're in here for steady gains. We're not here for quick thrills. And that's a really important thing I want you to grasp. We just continue the process. You know, every day for us is just another day. The markets are going to move. Announcements are going to occur. You know, we scan the markets. We see what's happened. And then what we're going to do to profit from those moves really becomes the next question. It's just like you're running a business. You follow a strategy. You reduce your risk as much as possible. And then you repeat that process every single day. Those same rules apply to trading too. It's like it is a business. It's one where we follow a system and we don't vary from it. Now, let's just recap on a few things to check what we've learned so far. Now, in terms of targets, if you remember, how many pips per week did I mention? What is a good beginner's target? Back to the question box. Yep, you got 100 pips a week, beginner's target, and trust me, it's a good milestone to experience because once you steadily hit that, you've got a nice little base to build upon, and then that becomes quite scalable. All right, next question. Next, what do we call trading in the downwards direction if we want to profit from a downwards movement? Back to the question box. Yeah, trading short. If it's going up, we're going long, so we trade any market direction, really. It doesn't really matter what happens out there in the economy. Our skill set is unaffected, and shorting is going to be something you're going to get very used to over the next 12 months. Okay, what time does the European session start? Yeah, 6 o'clock. Yeah, everyone's saying the same thing. I think everyone's grasped that. Yeah, 6 o'clock in the morning, certainly UK time. That would be about 7 o'clock European time, with most European countries an hour ahead. Great time for trading when all the European centres come online. And also maybe a slightly different question, but I thought I'd ask you, what do you think is the most important internal characteristics that somebody needs to have inside them in order to be a good trader? Does everyone have what it takes to be a good trader, do you think? Now, what's the most important internal characteristics that somebody needs to have to be a good trader? What do you think? Back to the question box. We have discipline, Tony. Yeah. Caitlin says belief, patience, not be greedy. Dom says process driven. A few other answers here. Yeah, passion. Yes, disciplined. All those things are important. But you know what? It's not enough. Okay, that's not enough on its own, because if you think about it, a lot of people have those things already in your careers, in your daily lives, in the businesses that you run. You might already be disciplined, patient, calm, maybe rational, all of that sort of stuff. But that doesn't actually mean that on Monday morning that you're definitely going to be trading the pound against the Japanese yen at 6 o'clock. Because if you trade the pound against the yen on Monday morning, you're going to want to do it in the first place. For me to trade every single day, I've got to want to trade every single day. There's only one thing that makes us want to do anything in life, and that's the drive that we have inside us. It's the motivation that we have. As I said before, the motivation is by far the most important characteristic that a trader needs to have to be successful. I know that because I've taught so many traders over the last almost 20 years, literally around the world. I've got to say, I've never met any trader yet that purely trades because they have a fascination with fluctuating interest rates or exchange rates. It's not because of a bunch of red and green bars on the screen. It's because you have aspirations, aims, and goals, and things that you want to achieve. Let's focus on that for a second. Let's focus you towards asking why. And this is the big question. Why do you want to trade as well as how? Because that's what's going to be the thing that keeps you focused. So what I would like to do, please, on the left-hand side of your notepads, if you're taking notes, I hope you are, so not in the questions box now, but on your notepads, can you please write down 3 things that you'd like to add to your life, or 3 things that you want to achieve effectively from this? I mean, this is just an output, isn't it? So please write down, and if you can, next to it in brackets, can you please write down how much money you think you need to generate in order to help you achieve that goal? That'll come in very handy later on when we help you with your trading plans. Part of the Lifestyle Trader Challenge is to then build that plan, that trading plan around what your aspirations are. So write down what your top 3 goals are, and then next to them, how much you think you need for those goals. I'll just give you a moment just to quickly do that. Now, look, we're all driven by, I don't know, different things in life. So let's think about what's important to you. And also, by the way, let me know, have you found that your goals have changed in recent times? As in, are your goals different now compared to maybe where it was a year or 2 ago with all the things that's obviously happened in the last year with the pandemic? A lot of people I speak to, they're using this pandemic as a way to give themselves a new lease of life. They're now focusing on things that they really weren't focusing on before. And I personally think that's really good to see. For example, a lot of people I speak to, they really enjoy this newfound independence. For example, how many of you have actually enjoyed working from home? How many of you have actually enjoyed that over this last year or so? Tom says, I live on Zoom. Yeah, many of us have been living on Zoom because a lot of people I speak to simply, they just want to go back to the office. Friends of mine actually rent out a lot of office space in London, and they're saying that, you know, that the interest in renting further office space in London has dropped because the idea of travelling for an hour and a half in the morning just to do the same thing they're doing right now and repeat the same journey back home and have to pay for that travel, by the way, £400, £500 a month is what the average person is spending on travel to do pretty much the same thing you're doing from home. So a lot of people, they don't want to do that anymore, and they've realised, hang on, I can be at home with a computer, I can be effective, I can actually be independent. So a lot of people are asking, well, what else can I do from home? And they're realising that they can invest in the markets, obviously because you're at home. Because now more than ever, this And don't forget, I've been doing this for 25 years, so I've certainly seen the trends. This is becoming a new way of doing things. Commuting, I think, is such a waste of time. And being stuck in traffic, being on yet another delayed train, that's 3 hours of your day that, look, you're never going to get back. You can spend that time with your family or do things that you really want to be doing. Another thing that I realise a lot of people are taking a lot more seriously now is their personal security and stability. And we know the pandemic has affected a lot of people financially, but here's a question I'd like to ask you. If you look at the economic impact of COVID, do you think people could have done a lot more to protect themselves financially? What do you think? Yeah, I think so as well. I think people could have done a lot more. Here's a controversial question. Whose responsibility is that? Is it the individual's responsibility to safeguard themselves? Or is it the government's responsibility to keep the economy moving and safeguard you as an individual? What do you think? Kevin, I completely agree with you. I'm going to say I think it's the individual's responsibility. I think if you're not looking after yourself and then things go bad, it's your fault because it means you haven't done enough when you could have done. Let me know, by the way, if you agree or you disagree with me, because I think that no one else actually cares more than you about yourself. You know, certainly the government doesn't care about each individual. It can't. It cares about big numbers of people, but certainly not about you personally. And also, to an extent, your employers don't either. You know that you can be replaced tomorrow very easily. You're the only person that can really take care of yourself. And that's why if you're not in a good position, that means you haven't done enough, or you haven't thought about a backup plan, or you haven't even thought about a contingency, and that becomes the individual's responsibility and then the individual's fault if things go wrong. And the sad thing is that we're kind of been taught this from a young age, to have a backup plan, to have a safety net, but it's a bit vague as to how to do that. And as soon as people get a bit older, they start to become a bit reckless with their finances. They get their paycheck, it goes out straight away, the money comes into their bank account, and they think, I know, let's book a holiday. People spend all their money and it causes them ultimately to go broke. That's not exactly the wisest of financial decisions. They should actually invest in themselves first before they look at liabilities. The amount of people that have liability compared to assets in this country is absolutely ridiculous. You know, a bit of a bonus comes in, you think, oh, I've had a good year, so I think, I know what I'll do. I'll stretch myself and sign myself up to a 3-year lease on a Mercedes C-Class because my friends will be really impressed with me. 12 months later, because it's a fairly average car, that's going to be facelifted 18 months anyway. So people are constantly making poor decisions that are almost sabotaging themselves. Does that make sense? To be honest, there's no excuse to be in that financial situation here in the UK, because the UK is one of the wealthiest countries in the world. And also the government is probably more generous than people really believe they should be. And if you're not in a good position financially in the UK, it means you're doing something wrong. This is not a war-torn country where people are fighting for their lives. This is the UK, where there's opportunities in every corner, crook and cranny. And it's, look, a real shame, because the average person in this country, I'm not sure if you know this, but the average person in this country, if they lost their income tomorrow, they'd be out of money in 2 months. How crazy is that? In 2 months, they'd be down to zilch. Now, when are they going to start taking personal responsibility to make sure they're secure? I mean, it's absolutely crazy. Yet again, they get a £1,000 iPhone in their pocket, and that's their focus. Instead of having £1,000 worth of Apple shares, they've got the phone. I think it's very sad, and I really feel for those people, because they're the people that are going to struggle most over the next few years, and they're not going to look very pretty. I certainly don't think it's going to look very pretty for the average person. The thing is, look, deep down, they know it. They're stood watching the car that's about to run them over. Do they step out of the way? No. They'll let it happen, and then they complain. And people who do that are giving away any chance they have to improve their own lives. They are abdicating, in my book, responsibility. Now, I'm sure there's no one on this call like that, right? Truth be told, look, we've all done it, but we can decide not to. We can decide at any time to do things the right way. We have that power, you, me, and everyone else. When it comes to goal setting, when do most people create resolutions? Yeah, that's right, after January. And how long do New Year's resolutions last? Usually halfway through January, and then people forget about them very quickly. Think about it. Think about where we are in the year. Like right now, I literally looked at my calendar this morning and I thought, God, this year's going so fast. And most people have probably forgotten what their goals even were. Here's the reason why people forget their goals very quickly at the start of the year. You know why? It's because they haven't made any immediate progress towards them, so they give up. And the reason there's no immediate progress being made is because, look, more often than not, they're still doing the same things they were doing back in December. And that's why every year ends up being the same. If you look at this year, people are still making the same money they were making last year, if they're lucky, and the year before that. And the question I want to ask you is this: are you still doing the same things today that you were doing several months ago? Because if the answer is yes, this year, next year, it'll be the same, unless something changes. That change comes out of the action that you take today. The past is gone. The future is yet to come. But today is really all that we can affect. Now, as well as what you want to put into your life, on the right-hand side, please write down 3 things that you don't want. 3 things that you're not prepared to put up with anymore. So on the right-hand side, these are the things that you put up with that frustrate you, that you no longer want to tolerate. That second list focuses now more on the pain than anything else. Question for you: when in life do most people take action? Do they do things? Back to the question box. Yeah, that's a lot. Exactly. Often when it's too late, when their back is against the wall, when they hit rock bottom, when it's painful, when they reach a place called threshold. And threshold is a place where you say, "That's it. I've had enough. Now it's time to make a change." And life will take a swing at you every so once in a while. Someone loses their job. Someone loses their business, or circumstances change in their families, or there's a big divorce, or maybe someone passes away unexpectedly. Look, most people always take action at the very last moment. Now, is it sensible to wait until it's late before we take action? Well, of course it's not, but that's what everyone does. And I always wonder, why do people do that? And I found the answer. The answer is because everyone is too comfortable. Everyone's within their own comfort zone. I don't know you individually or any of you individually yet, but I made the assumption that you guys are comfortable people. You know how much money is coming in each month. You know how much money is going out each month. I'm sure you have jobs and businesses that you run, and you know how much money is coming in. You know how much money is going out. But most people work very hard to live within their means. I'm sure you guys do. As you wake up tomorrow, life will be perfectly okay for you, I'm sure. You know that this time next year, life will be okay then as well. But if life's okay, there's no urgency or need to do anything else. I found that the more I focus on what is painful in my life, the quicker I move away from it, rather than brush it under the carpet and pretend it's not there. So focus on those 3 things that are going to inspire you to create change, but the 3 things that you're going to do to create that urgency, so you can use that as the motivation to start your trading day. And I'm going to play a video from some clients of ours who are in a very similar seat to the one that you're in right now. Have a little listen to them, because I think you're going to find it quite inspiring.
Forex has given me the freedom to do what I love doing.
Spending time with your family, that was the #1 thing for me, never to miss any of my children's performances in school, their activities. I'm always there.
Being able to help your family, being able to help the charities that you're passionate about.
To travel more. I don't think I've ever travelled as much as I do now. And I can pay off a trip in an afternoon.
We love the freedom of being able to go off skiing for a week at short notice and having the Forex pay for it the following week.
A lot of my friends are caught in the 9 to 5. A lot of them are unhappy, and I think they die for this kind of freedom, really. Look at them, I feel a bit sorry for them.
I don't think it is something that it's possible to do on your own.
You can't teach yourself. You have to do a course. You have to get professional help.
Put the work and effort in.
It is something you've really got to commit to.
Have the discipline to apply the rules.
I don't think you'll fail.
It's just like joining a new word.
I feel that Learn to Trade is one of the best things that has happened to me in my life, to be honest.
Decided to resign from work and do it full time.
I don't work anymore. This is a passion for me.
3 hours a week, 15 minutes a day trading.
Just a couple of hours a day, and then you have all the rest of the day free.
I've really just had positive months every month, and I'm doing really, really well.
I've made a lot of profit.
I've managed to grow my account significantly.
We've got one strategy which it usually makes about 2% a week.
I would say on average I'm doing about 5% a month. 25% return.
My best month has been 15%.
Probably just under 10%. But I know that's just a starting point, and I can achieve much higher than that.
90 pips out of one currency.
There was about 100 pip move, and That's probably what I earned in like a week of working.
My best trading month so far is 12%.
Made me about 15%.
About 8%.
6% a day, which is a lot. I'm quite happy to do 6% a month.
I earned $700 in one day.
It's making steady profits, so yeah, it's going well.
And gave me a nice 60 pip profit.
You're just growing your capital all the time because you know how to do it.
I made almost £800. So I did another trade with Spain and stocks 50.
Yes.
So altogether, I made 4,500.
And you watch the money coming in as a result of what you're doing, so it's hugely rewarding.
My best month has been 14%, which has just been outstanding.
3.5% was my best trading week.
And I've done the 10% in probably not even 24 hours, so it was pretty good.
The rewards are frightening.
And I'm hitting 4%, which is quite good. Walked out with about 1,100 quid.
And it's just gone up and up and up.
As to who can do it, well, I'm looking forward to my 16-year-old son learning to trade.
My father recommended this course to me. He said it was amazing, and I would recommend it to my friends and family as well.
I highly recommend this program to my friends and family. In fact, I've got 2 friends who are currently engaged in this program and making money also.
I've recommended this course to 3 of my friends, and they're making some big returns as well.
I would absolutely recommend this to everyone I know.
I would definitely recommend it to my family.
Definitely recommend this course to people.
I would highly recommend this course. I highly recommend this program.
How many times is your salary multiplied by becoming an FX trader from where you were as a recruiter?
Well, it's multiplied by 5.
So you're making 5 times more money than you were making in regular employment.
And I was a millionaire by I was 40, and that was in the recruitment industry. So do the math.
Tell us what you were making in rebates back in December, and tell us what that number looks like now.
It was probably maybe 2,000 or 3,000 when I first started. Now it's between 15,000 and 25,000 a month.
Good money? How old are you?
25.
Not doing too bad, is she?
You came on the program in May last year, right? Yep. First time as a currency trader. Yep. You're now managing a fund of how much?
30 million. So,
how old are you?
27.
Oh, so. I love it. And how much did you get last month of trading that?
$438,000. Yep. So,
life sucks, right?
Yeah, it's hard work. It's hard work.
And you know, they all have something that drives them, something that makes them start their day. Did you notice that? And that's the difference, in my opinion, that makes a difference. That's what you'll be doing, because you'll be learning the same strategies: the T-wave, the volatility reversal, the 180 phase changer, the pip runner, the Bollinger bounce. These are 5 incredible strategies that you're going to be able to start using straight away. Let me break them down a little bit. We've looked at the T-wave, but the T-wave is a great one to use in the morning. So you early risers out there, the T-wave is going to be the one that you're going to really enjoy a lot. Now look, you've also got the volatility reversal, a different strategy, but which is a good one to use when the market's not in a trend. Because look, sometimes you'll find that the market is neither trending up or down. Instead, it's kind of ranging sideways. When it's a bit rangy, this is the tool that we use for those particular trading conditions. You've also got the phase changer, which of course will be very popular for those of you that are busy. If you don't have a lot of free time because you're busy with your work and your businesses, use this strategy then, because it takes about 10 minutes to jump into a single phase change of the trade. And also, it doesn't really matter what time of the day you're trading. The currency markets are open 24 hours a day. And this strategy, look, it's flexible. And for those of you who are extremely busy, I think you're going to find it to be a very powerful tool. Now there's something called the pip runner. Now if you're looking for something a bit more advanced, you're going to have a lot of fun with the pip runner. It focuses on faster time frames because we use the 15-minute chart, and it's a little bit more complex than some of the other strategies. But for those of you who would like to spend a bit more time trading throughout the day, I think you're really going to find you can get creative and flex your muscles with the pip runner. Very, very powerful strategy, and certainly for those of you that want to get into some intraday trading, it's an amazing tool. You've got the Bollinger bounce, which I have to say is one of my favorite ones as a sort of bread and butter strategy. It's easy to understand, and you can assess and set trades up nice and fast once you quickly get the hang of it. So you've got 5 different strategies there, and we're going to figure out which ones are going to apply best to who you are and what your life is like. The way we do that is we use what we call the 5-3-1 principle. So when we speak to you individually, we're going to figure out how you should organize your day. You'll know what time of the day, which 3 strategies across which 5 currency pairs are best for you to focus on. We'll figure that stuff out when we speak to you individually because it's going to be different for all of you. Here are some of our clients with me actually at an awards ceremony. Now, we always love running these when we're able to do normal public engagements without obviously social distancing. You know, in this organisation, we like to do lots of fun events because it's, look, it's a good excuse to get together. And we like to think of ourselves, even globally, as one big trading family. It helps us stay connected, motivated. And look, I like to give out awards, and why not? It's great to see people who come often very intrepid, worrying, not sure they think they can do it, and then suddenly 6 months later or 12 months later, they've replaced their income, or they've certainly made a lot more money than they ever expected to have done in a sensible, consistent, timely manner. People's little faces light up, and I like to see that when we're doing those award ceremonies, so maybe you'll be at one of ours in the near future. Here's some of my senior team. Now, you're going to be meeting my team, you're going to be interacting with us. We have great systems, but it's also the human element that's got to be there, which is what our clients love the most. Because look, whilst technology is great, nothing beats the old school approach of actually having a human being to be able to speak to and discuss with and help and guide. In fact, I was recently featured in Forbes and I spoke about the importance of having the right people around you, especially after you've learnt the educational part of a particular trading strategy. Having a mentor-led coaching experience ensures you correctly integrate the learning and then can handle the psychology associated with successfully reaping the results. So it's going to be quite exciting. Not only are you going to be learning professional strategies, you're going to be coached by professional mentors, and you're also going to be using professional software. And I thought, what better way of actually showing you how Smart Charts works than to actually show it to you on this computer. So let me show you how it all works. Have a little watch of this. So very soon your computer is going to look like this. You're going to have Smart Charts on it. Now at the moment there's no visual aids turned on. In fact, you'll see at the top there it says no strategy, which means that a strategy has not been selected yet. So it's just blank vanilla chart. No visual aids, although you will see these dotted red lines because Smart Charts is a professional trading system and we have live pricing and also live news events fed directly into the chart. I'm not sure if you've ever noticed, but if you look at some of the charts on other platforms, sometimes they're delayed, sometimes by a minute or two, or sometimes even by 15 minutes. The reason why is because it costs money to have access to live information. That's what professionals use. Now, look, a lot of people do pay £400 to even £500 a month and upwards for a live data feed. In fact, actually, you can even pay £2,000 a month if you want a Bloomberg terminal to get your live information. I will tell you this, you'll be glad to know, by the way, Smart Charts is nothing remotely close to any of those price levels, which is good for your pocket. But now, look, let me bring up a trading strategy. Let me show you how it works. There's lots of features here that I could spend all day going through how everything works here. But to bring up the strategies, move your mouse cursor to the top left where it says no strategy. We click there. And what that does is it brings up a dashboard showing us the strategy. So you can see the pip runner, phase changer, here's the T-wave, the volatility reversal, bolly bounce. You can see the different strategies, and underneath each strategy is a list of currency pairs across different time frames. Some of them are on the 15-minute chart, 4 hour, 5 minute, 1 hour, 4. They're also different time frames, and you'll also notice that some of them are glowing white and some of them are static. Now, what do you think it means if it's glowing white or if it's flashing? So if it's flashing, it means Smart Charts has found a pattern match on a trading chart, a pattern of interest that we should go and have a look at. By the way, every single strategy is based on certain behavioural patterns which we are looking for in the markets. And when it flashes, it's found something. So we go, have a look at it. Now let's actually have a look at one. So picture this. Let's say you're at home. You've got your laptop in front of you with Smart Charts and you click on one you're interested in. So let's look at the pound against the Australian dollar, for instance, and see what's happening there. Okay, so we've clicked on it, and immediately we can see that we have an opportunity to go long on the pound against the Australian dollar. So we are buying the pair, which we call, as I said before, going long. Let me show you how we know that. Firstly, we can see an upward pointing arrow here. Also, if you look at the red and green button, can you see how the green button is flashing? And if you look at the top of the graph, can you see how it's kind of glowing and green? Yeah? So the area of the graph that we're targeting is visually highlighted on the chart. By the way, I hope you like how this interface looks. We've worked with many psychologists to make this easy to use. The systems I worked with back in the city were pretty horrible interface-wise, and a lot of them still, to be fair, aren't that intuitive. For us, it's actually less about the pretty as it is making things easy to use. When you've had a long day at work, the last thing you want to do is look at a fugly trading screen. So now at this point here, if you don't really care why it is a good trade to get into, what you could do is when you see the green tick, you hit the green buy button, go through a couple of checks in terms of position size, and pretty much the rest is done for you. But what I'm going to do is explain why I think this is a good trade to take. There's been some interesting news that's come out recently which makes this a good trade to look at. Now, by the way, you don't have to be an economist and you don't have to be an expert on every country in the world. That's what our research teams are here for. But there has been some interesting news that has come out. Firstly, surprisingly, the UK has had some pretty good news come out recently. Our GDP figures were as forecasted. So in fact, let's have a look. By the way, this actually shows you the news announcements that have come out. So let's click on this. So what the system is telling us is that we've recently had the GDP figures come out for the UK economy. And of course, the actual GDP figure was as forecasted, which is a good thing. And by the way, you don't have to be an economist, but if you read this little blurb, it says the GDP is considered a broad measure of the UK economic activity. Generally speaking, a rising trend has a positive effect on the pound, while a falling trend is seen as negative. Which is really helpful for us because you can actually learn what's happening with the economy just by using smart charts. So when we see the forecast and the actual result was the same, which is good news, so not bad at all. So the UK economy is performing as expected, which is good for investors. There's quite a few fundamental factors there which are causing the pound to go up and the Aussie dollar to weaken. Earlier on, as well as fundamental analysis, we mentioned technical analysis, and that's where we analyse the chart. Now, if you look at the chart, would you say it's going on an uptrend or is it moving in a downtrend? Well, it's moving up, isn't it? Not only visually is it moving up, but can you see these yellow and blue lines? Now, look, when the yellow line is above the blue line, it means the average price is rising. So not only visually are we in an uptrend, but mathematically we're in an uptrend also. This is the kind of math, by the way, they should actually teach at school because actually this is useful. So the average price is rising mathematically as well as visually, and also the timing is spot on. Let me get my pen tool out and I'll show you this. Do you remember earlier on how I mentioned that markets breathe? So markets kind of breathe out and then they breathe in. Do you remember I mentioned that earlier on? Well, check this out. You can see how the markets breathe out because it's breathing back in. Breathing out, back in. You can see it's breathed out, breathe back in. Again, you can see the market then breathe out and it's breathed back in. And you can see the market breathe out and here we are, breathes back in. So next, we'd expect it to breathe, that's right, out. The market's going to breathe out. Now we're getting in at number one, not number two, remember. Now we can see higher lows and higher highs showing us that the sellers are really maintaining control of the market. So fantastic. So we're getting in at number one, not number two, like the amateurs would. The timing, therefore, is now spot on. By the way, hopefully many of you are starting to see the pattern emerge on the screen. And the reason why we see patterns is because a chart is just a visual representation of human behaviour. And because human behaviour is predictable, it means we can do stuff like this. So the timing is spot on. So there's lots of reasons from lots of different angles to why it's a good trade to get into. Now, let me just wipe these drawings off. Here we go. And so we're going to look at our trade, which is on a 4-hour chart, by the way. You can see that at the top here. It says H4. And to take this trade, we just need to hit the green buy button. So let's click on that now. Opens up a confirmation window. Right, let's have a look at this. So what you have is a confirmation window which gives us our entry, our stop loss and take profit level. Notice they have automatically been calculated to be in the appropriate position. Notice we're targeting 52.3 pips, not 50, not 55, 52.3. It's that number for a particular reason, which you're going to learn about on the training. That's already been set. We don't have to mess around with that. You can see the risk management is automatically set to 1%. That's the default I've set it to. It automatically defaults to 2%, but I risk 1%, because when you have more money, you can reduce your risk. Now, if I increase my risk to 2%, for example, it automatically does the trade sizing, lot sizing, and pound per pip calculations. So you don't have to figure out, right, what is my distance for the entry and stop loss, how many pounds a pip. You don't have to do all that stuff. It automatically does it for you. Again, it's about saving time and less stress. Entry and stop loss target is set. Expiry, this is important. Now, we do need to set an expiry for this particular order. There's quite a few things I need to elaborate on about this, which we're going to do on the training itself. Obviously, it takes a good 2 hours to actually explain how the strategy works. But in terms of what that expiry should be for this particular trade, we'll go into that on the training itself. Just don't worry about that right now. Now we've gone through the checklist, everything's ready. To take the trade, we go ahead and we hit that green tick. So if I hit it now, it will just remind me that the market's closed because, for me, it's Saturday. But tomorrow night, obviously, Sunday night at 10 o'clock, that's when the market reopens for the week. So when the week begins, Sunday night at 10 o'clock, now tomorrow night at 10 o'clock, you press the green tick, you'll have the entry, stop loss and target. And at that point, you can close your laptop and carry on with the rest of the day. Because once the price hits the target, it'll automatically close and you'll see a notification in your journal that says 52.3 pips has been added to your trade balance. And that's how, within a few clicks, you can have a trade selected, all the parameters set up and automated for you. Now, do you think, by the way, that you could do what I just showed you to do, yes or no? Okay, good. Did you also start to understand the reasons why it's a good trade? With why the pound's strengthening, with why the Aussie dollar is weakening, with how we're not in a downtrend, we're in an uptrend. Get number one, not number two. All those things you'll learn about in great detail. But the most important thing is whether you have a passion for how the core engine works or not, you will know what to do anyway, which will be really good to show you. And also, what I'm trying to do here at this stage is I'm trying to take something that's complex. And by the way, this is complex, but I'm trying to make it easy to understand. So hopefully that makes sense. Because what I could do is I could be very boring. I could go into a lot of technical jargon, a lot of science, a lot of math, a lot of economics, and it all go over the heads of a lot of people, and it'd be pretty pointless. So what I'm trying to do at this stage is show you kind of how it works so you can see it. Does that make sense? And that's just what I'm trying to do. Do you know what? This is the thing. You'll get this and you'll understand exactly how this works, because I don't want to blow too much smoke up our backsides, but we know what we're talking about. Hopefully you're seeing that from listening to me today, is that we know what we're doing. And also, not just that, but we have a great way of explaining things as well. You know, we're eloquent, we're articulate, we know what we're doing, we know what our skill set is. And look, it's great to be able to translate this in a way that you can actually understand and get it. It doesn't matter if I could have someone who doesn't have the foggiest clue about trading. I'll use analogies to help that person understand it. And it's not just me, by the way. The rest of the team are fantastic. I mean, Richard Branson said in his book, you know, if you're the smartest person in the room, you're probably in the wrong room. And that's why I surround myself with the colleagues I do. Just don't tell them I said that. So it's really cool to show you. And by the way, have a look at these. Can you see these other little blue arrows, by the way? These are all trading opportunities that you could have taken. So, for example, here, have a look at this one. Look at the bottom there. That was the 20th of August. That was yesterday. So these are trades that just happened last week. Now, how many of you are actually quite excited about having smart charts on your computer? How many of you are quite excited about kind of having this as part of your sort of daily routine? Because, you know, think about it, obviously, you know what your day looks like right now. You know that the jobs you're in, you know that the careers you're in right now, you know that the business that you run, you probably have the same routine for quite a while, because as human beings, we do get used to a daily routine, don't we? What's quite nice is to find a bit of spare time. Everyone has a little bit of spare time. Rather than wasting time on Facebook, just use some of that time productively. Why not? You don't have to spend all day doing it, but have this as part of your daily routine. It's quite fun, and it does give you satisfaction because you're actually doing something for yourself. And sometimes people lack that kind of earning satisfaction, because when you work for someone, you're really helping them, not you, aren't you? Very rarely do people get a sense of self-satisfaction unless you run your own business, of course. This is one of those things that you can do. So this is really awesome to show you. I'm excited for you guys to have this on your computer. And do you know what? It's so good to actually show you how this works. What I'm going to do now is walk you through the process of how to actually now get this set up. So let's go through that now. And firstly, who should actually do this? Now, in my opinion, I think no brainer, absolutely 100% you should do this if the things in the first list apply to you. So I think you should do this if you're someone that wants to be their own boss. Maybe already you are your own boss, or you're someone who wants to be challenged, like taking calculated risks. You want to create better work hours, spend more time with your family, be doing this anywhere in the world. All you need is a bloody laptop, have no one to answer to. Also, if you're someone who wants to really grow their skill set as well as who should do this, I also think there are certain people that should not do this. In my opinion, I don't think you should do this if you have a gambling mentality, because gamblers do not listen, they don't follow rules, and they don't follow logic. So if you have that gambling mentality, I would think twice, because if you treat this like a business, you're just a normal person that wants to have something structured and things on the left apply to you, then today's the start of a very exciting journey, which is the UK Lifestyle Trader Challenge 2022. I'm now going to walk you through the process of getting this set up on your computers today. Before I do that, I just want to make sure that you're ready with a notepad and pen, because I'm going to ask you to write a few things down. But also, please do me a favor, and can you please make sure that your phone is next to you? If you're watching this on your phone, that's fine, but please make sure your phone is next to you, because as much as I'd love to take all of you on, there's only a small group of you that we're going to take on as part of this, and my team are going to call you after I finish, and they're going to help you get set up with Smart Charts. So please make sure your phone is next to you, because only a lucky group of you are going to be able to take part in this. So keep your phone next to you, have a pen handy, and also do me a favor, can you please ignore any of the prices that you see on the next few slides, because what you are going to see is what we normally charge our clients. And obviously, things are going to be very different for people who I'm talking to today. So this is going to be pretty exciting. Please just ignore any of the price that you see on the next few slides, because obviously we're doing things a little bit different today. So let me know that you're ready. Okay, let's do it. So step one, please write this down, is get your smart charts ready. So from today, your computer will look the same as mine. So that smart trade scanner, the PRT, that dashboard with the flashing currency pairs, that is going to be a screen that you're going to get very used to seeing on a daily or weekly basis, depending on how often you trade, whether you trade every day or 2 times a week. That's based on what your plan is. So yeah, filters through all the currency pairs. When it finds a pattern, it flashes it up on the system, which is fantastic and saves you a hell of a lot of time. And also, by the way, whilst we're on this slide, can you see at the top there, it says £69 per month. That is the monthly subscription to be able to have professional live data and live pricing fed into those charts. I mentioned to you, some people pay upwards of £500 a month to have live information. Smart Charts is only £69. How amazing is that? That's less than a cup of coffee a day, which I think is really good. I want to make a big point of that. So the Smart Trade Scanner, flashing currency pairs, that's there. You've also got the complete e-learning study center. So all of our trading education has been cut down into bite-sized segments and also made available in the Learn section of Smart Charts, which is amazing. So you can revise and review all the important elements of your trading anywhere at any time and as often as you want, because of course you're going to be doing your training live with my team, and then after the live training, when you want to recap something, then you use the Learn section. Also, by the way, it wouldn't hurt if you're a complete beginner and you don't know anything about trading to watch the first 5 videos, because the first 5 videos will tell you everything you need to know about the basics. So the Learn section is there for you to use to help you, and we've got a very talented animation team that have brought our expertise to life. You wait till you see it. It's absolutely unbelievable. So you visual learners out there, you're really going to enjoy that. You're going to get the complete e-learning study center made available in the Learn section of Smart Charts. You're also going to get those strategies built in. So look, You don't have to be an ex-Google programmer to get your trading station set up the way it needs to be. So if you're not very tech savvy, it doesn't matter. Even if you are like my dad, when I think he pecks at the keyboard every time he types, you're going to be fine because all of the algorithms have been programmed in. The settings for all the indicators have already been adjusted appropriately, and it's all configured from the get-go. But in fact, by the way, just so you know, for your reference, even though it's configured straight out of the box, we're still going to be explaining to you what everything is and what everything does, because I know some of you will ask, please, can you just tell me what the settings are that you use? Well, look, don't worry. We're going to tell you exactly what the numbers are, all of the settings. We're going to go into that anyway when we teach you. But we're going to pre-configure it. So it's just as easy for the non-tech savvy people out there as well. Look, you've got 5 strategies built in. You can also use it across any platform. So it doesn't matter what platform you use. I've got a Mac here. I've got a Windows laptop here. It doesn't matter if you're on an iPad, a Google Chromebook, an Android tablet of some description. Whatever device you're using that has an internet connection and an internet browser, you can access smart charts from it anywhere, which is great because it means that you can be completely remote. You don't have to take a particular machine with you, which is often the case. And I think that's really intelligent because when you log into smart charts on your phone, it actually remembers the last screen you were looking at. Although, by the way, please don't be one of those people that checks their charts every 2 minutes to see if your target has been hit, because I promise you, staring at the chart does not make the price move any quicker. You saw on those charts that some of those trades may take a couple of hours to hit the target, so do something else with your time. Take up a hobby, keep yourself busy. That's not a bad thing to do. So you've got cross-platform support with smart charts. You've also got all the advanced trading tools made available as well. And I know this will only apply to a group of you on this webinar today who do come from more of an institutional trading background. I do know that some of you on this webinar today are working in the city and you're used to using quite advanced systems already at work. Now, just so you know, Smart Charts is completely customizable and you can create your own template. So whatever you're normally used to using, you can customize the screen so you can actually do what you want to do as well, which is also very handy. Let me ask you a question. How many of you found it quite helpful when I was explaining that trade on Smart Charts? With how it was trending and how it was cycling, how many of you found that quite helpful? And I appreciate, I only spent a couple of minutes talking about it, but how many of you think it would be quite useful if every single day you could tune in to one of my traders and observe and listen to them break down what's happening in the markets every single day? How many of you think you'd find that quite helpful? Okay, I'm seeing the message. Well, look, that is exactly what we do. We don't mess around, by the way, when it comes to this stuff. You can see we take this whole thing pretty seriously. That's why people do it. So every single day, just so you're clear, every single day we do a live, not recorded, live daily web class where one of my traders will talk about what's happening in the markets across our trading floors. This is what's looking good. This is what's trending. This is what we're waiting for. They're going to be explaining what's going on. So if you don't fancy doing stuff on your own, guess what? You don't have to. You don't need to because we do a daily live web class anyway. So it gets you looking at the market through the same eyes. And that's the key thing. Discipline is about following a path that works. That really is the whole purpose of having guidelines and building discipline, making sure that you're singing from the same hymn sheets, if that makes sense. And so that is every single day, which I think is absolutely fantastic. We're fortunate that our organization is so large that we have enough traders around the world that we can facilitate this. So step one, your smart charts. You have your smart chart trade scanner, the complete e-learning study center, the built-in strategies, the cross-platform support, the advanced trade tools, as well as the non-stop, every single day, daily live web classes. Now, once you've got your software, step two, of course, is putting it into practice. So if step one is kind of getting into the sports car, step two is being shown how to take it around Silverstone by Lewis Hamilton, because step two is called Learn Forex Live. Now, this is a combination of live immersion training plus you get one-to-one mentoring. So it's live immersion training and then one-on-one, so you and one of my professional trading team working together. And that we're going to do together and spend 3 live days together. So we're going to be doing a 3 days together doing the training and getting things up and running. And that's 3 entire days. So the timings for each of those 3 days is 9 o'clock in the morning, till 5 o'clock late in the afternoon. We're going to spend 3 entire days together, by the way. It's not like today where I've gone a million miles an hour trying to cram in as much as I can in 2 hours. We take our time, we break things down, we explain things and go through things in a nice, slow, easy to understand way. And look, we take lots of breaks so you can kind of stretch your legs and stay hydrated, all that stuff. Now we're going to see some practical or some physical shots of our training centres that we have around the world. However, for the purpose of what we're doing here, we're going to be doing our training online. So that's great news. It doesn't matter where you are in the UK, it doesn't matter where you are in the rest of the world. We're going to actually be doing this online. So you can actually take part from the comfort of your own home, which I think is incredible. Now, how are we going to split things down? Now, just to give you a bit of a basis, in the first couple of days of those 3 days, we're going to go into the heart of it. How does the T-Wave strategy work? What are the steps? Not just how to use a strategy, but why does that strategy work the way it does? We go into the mechanics. In fact, what we're going to do is go through the 6-step trader cycle. Now, it doesn't matter whether you're a trader at Goldman Sachs or JP Morgan. If they're looking at the pound-dollar chart, they're looking at the same chart that everyone else is. And you're going to be learning the professional approach of analysis. So this is where we actually go into looking at trends, relative price, additional assets, decision-making, examining, reviewing. But we're not reinventing the wheel here. We're simply showing you how to actually do things properly. So finally, for those of you who are sat there who actually want to actually learn this, this is going to be incredible for you. You're going to go through the first couple of days to get right into the heart of it, really understanding how it works. And after day 2, that's then followed by obviously day 3, which is where the fun starts, because this is what we call live analysis day. The live analysis day is where we take the theory and now we're putting it into practice. So we spend the entire day hunting for real trades. We're looking for trades to take. We're looking at the markets. And by the way, once we find a trade, what do you think we do? Yeah, hit it. Yes, trade it. Yeah, we can go and we can take it. That's right. The first 9, 10, 11 trades you do, you can be doing them on that day. And it's like being, look, on a golf course with Tiger Woods. There's no better feeling than not only learning something, but actually applying it with someone holding your hand as well. And look, I'll tell you now, it's a great feeling. It's a great way to start your journey. It's a lot of fun. Day 3, I think, is the most fun day. And so we're going to spend 3 entire days going through the strategies, going through the process. Now, after day 3, you'll then continue doing some trading in your own time. So I know that in your first week, and it always happens, you'll probably feel like doing 25,000 trades to begin with. But just pick out one, see it through to the end, wake up the next day, do another, just go through the motions of adding this new process to your normal routine. I found early on that I prefer to trade in the morning. Why? Well, as I said, I'm an early riser. I also like to know that where I am by the end of the day, that feeling and that satisfaction that I enjoy the most is that I know where I am, and that you're going to get that feeling as well. Now, after your first week of trading, it's a great time to check in with your coach. That's right. As I mentioned from today, you're going to be assigned one of my traders to be a one-to-one mentor. So you check in with your coach, use them. That's what they're there for. Ask them questions. Have them help you with your trading. You'll be connecting. You have a look at your trades, answer any questions, and we'll go back and look for some more trades to place together. Then you're going to trade for another couple of weeks, do another mentoring session, go and trade for another couple of weeks, do another mentoring session. It's crucial to have someone there holding your hand, helping you and building that discipline. Now look, people benefit from having a mentor in different ways. Some people really like the handheld nature and comfort they get knowing there's someone there to help them out and that they're not on their own. Other people really like how coaches push them. So it doesn't just matter what level of trading you're at. You might be here, you might be here. Your coach is going to push you even higher. They're going to stretch you so that you don't return to the same shape. That's what really coaching is all about. And it's through that step-by-step process that we start learning with you, we guide you, and then we mentor you as well. So as you can see, we charge around £10,000 for the entire setup. So I mentioned earlier, on a typical client of ours, normally someone that has plenty of money to put into their trading capital and education. So for them, putting £100,000 into a trading account is not much of a problem. £10,000 to get set up with their education and software, not really much of a bother for that normal investor either. However, listen, I did mention that we're going to do things differently today because I want to lower that barrier of entry so we can actually get people involved who otherwise wouldn't be able to. And now, before I explain to you what we're going to do with the price, because it's actually very exciting, there are some special dates that I want you to please take note of. These are the dates that you're going to be spending those 3 days with my team getting things going. Now, when I show you these dates, can you please choose one and then type it into the questions box immediately, which date suits your diary the best? Okay, these are the 3 dates that we're going to be going through the learning, the education, implementation of what you're learning. Now, look, you've got the first option there. So if you can't do the first option, there's a second option there too. And of course, you've also got a third option there too. So you can please take a moment to look at those dates, put the date in the question box, let my team know which date suits your diary. So I'll just give you a moment to have a look at your calendar. And then you can type your preferred date into the questions box, which will let my team know which one suits you best. If, for example, none of those dates suit your diary, can you please also let my team know in the questions box? I've given my team strict instructions that you guys are attending this event with me today have a priority. So pick one of those dates and we'll make sure everything gets set up. If you guys are ready to get kicking off, awesome stuff. Right now, I did mention that I'm going to make this very accessible for you guys. However, before I explain to you what we're going to do with the price, I did mention that we want the right people, because as part of this Lifestyle Trader channel, look, we're not just looking for every Tom, Dick and Harry. We want the people that really want to do well. We want people that really want to give things a good shot and have personal goals that they're really motivated about achieving. We're looking for the right kind of person. So therefore, there's some kind of requirements that I want to put in place. The first requirement, please write this down, is before you do our training on the days that you've selected, can you please make sure that you have a trading account open with some money in there to start trading? Otherwise, you won't have the momentum to get yourself moving at the right time. We want you to train and then we want to implement. And the real learning and the real implementation is really where the trader is born, in my opinion. The reason why is because we want everyone to put it into practice and start trading straight away. We don't want anyone being left out and able to place a trail whilst everyone else does. I want everyone to have the opportunity to be able to place trades when they're ready. It doesn't matter how much you start with, whether it's £1,000, whether it's £10,000, or whether it's £100,000. That's completely up to you. So a bit of money to start trading with. The second requirement is I'd really appreciate if you could take part in one of our charity trading days over the next year. So we do something called a trade-a-thon and another event called the Flying Trader. Those of you know me, I'm a helicopter pilot as well, which are really fun and amazing days. And we'd love you to attend one of these days, use the skill you're learning to help raise money for some of the causes that we're really passionate about. You guys are very aware that I run the Secker Foundation and we get the brokerage. You keep all your profits, I keep my profits. Actually, I donate my profits, but you keep your profits. But the brokerages that we use donate the money that they make from our trading activity to the foundation. And so it's a real win-win. Look, we really appreciate that. In return, you'll also get to spend more time with the team. And the third requirement is that you're also willing to allow us to document your progress. We just like to document your progress and your success just for the next 6 months. We'd like to say how many pips you're collecting, just one email each month, how many pips you're collecting, how much percentage growth you're seeing in your account, and also a few words to describe your experience, what your favorite strategy is, that kind of thing, because with the information we collect from you, we're intending to use that for our marketing purposes. So if you don't want your name to be used anywhere, all we need at a minimum would be your initials. So as long as you can stick to those 3 requirements, you can take part in the Lifestyle Trader Challenge that I am launching right here, right now, today. And as I mentioned, I'm going to make this accessible for you. So here is the good news. You're not going to have to pay anywhere near the normal £10,000 we charge our clients to get involved, because firstly, I'm going to do something pretty outrageous on today's event. I'm going to give you the Learn Forex Live, that 3-day program. I'm going to give it to you completely free of charge. We're not going to charge you a single penny for any of the training or any of the mentoring. The reason why is that I don't want there to be any barriers. I want you to be able to get stuck in straight away and start learning. Just because you might not be able to access £10,000 for your education, if you're prepared to participate fully in this Lifestyle Trader Challenge, I'm prepared to cut you a break. I won't charge you a single penny for that. And guess what? I'm also going to help you out with smart charts as well. I'm going to take £1,000 off of smart charts. So now there really is no reason why you cannot take that money and put it into your trading account to get started. So you're going to be able to do the entire program for basically a few grand. And that covers the entire process, the learning, the training, the education, The software we normally charge 10 grand for, you're going to be able to do the whole thing for a few grand, which covers everything. Now, I did mention that as much as I would love to take all 159 of you right now, unfortunately, because the amount of coaches that we only have a few coaches on our trading floor, we only have the first 31 people that put their phone number in the questions box are going to be able to join. So the first 31 that put their phone number in the question box are going to be able to take part in the Lifestyle Trader Challenge and take advantage of this offer that we're doing here today. So I have to keep this fair, folks. It's a first come, first serve basis. Once those places are gone, they're gone. I can see a lot of numbers are flooding through very quickly. So look, keep them coming through. Now that's going to happen. Let me tell you what's going to happen next. Make sure your phone is next to you, because in the next 2 to 3 minutes, one of my team is going to call you to get your smart chart set up. So your software basically looks exactly the same as mine does today. So in the next 2 or 3 minutes, you're going to receive a phone call. My team is going to get you set up on smart charts. If you don't receive a phone call in the next 2 or 3 minutes, it just means you're next in queue. So please be patient. Go make yourself a cup of tea or something and make sure your phone is on loud, because my team are going to help you get set up. Now, look, if you're having trouble using the questions feature of this webinar, I know a couple of you have had that today, you can also text your phone number to the number that you now see on the screen. So only if you're having trouble using the questions feature, text your phone number to the number that you can see on the screen there, because what's going to happen for you guys is you're going to get set up. You're going to receive a phone call from my team to get you set up with your smart chart. That's crucial. And then we can get you set up in the process. They can show you how to access the modules, get you ready for those 3 days of training with my head trading team. So you have some very experienced traders and mentors on that program, helping you get the very best and the very best start to your journey. Look, this is such an exciting time. And look, congratulations, well done. I've got to tell you, I'm very excited for you guys. I mean, there's so many of you put your number in here today. I don't think you could have chosen, and I really mean this, a better time in history to actually start this journey. Traders wait for times like this every 10 years. We had it in the dot-com crash. We had it in the credit crunch, and now it's that time that people have been waiting for 10 years, and it's finally now here. And you guys are part of it. People always say, God, I wish I was in the right place at the right time. Well, look, now is that time. As I mentioned, and to be very clear, to be part of this lifestyle trader journey, you need to be prepared to put some skin in the game, and also let us know each month for the next 6 months how well you're doing with the tools and the edge I'm going to give you. And if you're prepared to provide your testimony and show us how well you're doing, you're going to be able to do the entire program for a few grand. As I said, look, we normally charge £10,000, as I mentioned, and this is strict on 31 people, I'm afraid. But as I mentioned, the first 31 people that put their phone number in the questions box are going to get the entire program for $2,995 plus that £69 a month for the data feed. It covers everything. I can't count all the numbers on here because there's a few, let me tell you that much. But if you're there and you haven't put your phone number in yet, put it in now so that we know we can get you guys set up. Look, it's an exciting time. In fact, shortly after I started trading quite aggressively in the 90s, we had the dot-com boom and bust, which was an incredible springboard for my trading career. And look, right now, you have pretty much the exact same opportunity and timing to springboard yours. So I tell you, I'm super excited for you guys. Listen, if you follow my organization, I don't normally do these types of webinars. There are probably 2 very important things going in your favor here today. Number 1, look, your timing is bloody good. This is, post-COVID, you couldn't pick a better timing. And number 2, by participating in this challenge, you're effectively getting 70% discount off the normal price, which hopefully lowers the barrier of entry to people who deserve to be rewarded for their effort, not just the privileged few. So if you're sat there sitting on the fence thinking, should I learn how to invest my money? Well, look, I always look at it, what are the other options? What else are you going to do for the next 12 months? What are you going to do to take advantage of this next economic downturn? What is your money currently doing for you? Is it sat in a savings account? If it's sat there in investments that aren't performing well, get it working for you. You've worked hard for your money. You need to get it working harder for you. Having it sat in a bank account earning 0% interest, that's not a good thing at a time like this, because inflation is higher than savings. So that hard-earned money that you have sat in your bank account, it's going to be worth so much less next year. It's effectively evaporating away. What £10,000 buys today is not going to be the same as what £10,000 buys next year. So have a look at school fees. Have a look at material costs when it comes to extending your properties. Think about your business expenses. Think about everything in life. If you're not getting your money working for you, you're going to be playing catch up. And this is your time, and you can do this. I absolutely promise you that. If you understand, look, 10% of what I've showed you today, you're on your way. But don't be one of those people that just sits there doing nothing for 12 months, seeing everybody else take advantage of this time in the markets. You know, you've looked at what's happened in the markets over the last 12 months. People are gutted. They didn't take advantage of the crash that happened last March, should I say, and they're sat there thinking, crap, what was I bloody doing? Don't miss out on what's happening now. This is your time. But look, only you can make it happen. I want you to know that I am genuinely excited for you. If I was starting my trading career now, this has to be, in terms of market timing, one of the best launch pads you could ask for. If you have any questions whatsoever, put your number in the questions box, put your phone number in the questions box. And if you have any questions about money, about payments, put your phone number in the questions box so you can speak to my team. There's never been a problem where a solution can't be found, in my opinion. So if you have any questions, ask my team. Look, they're here to help. Next week's going to be very exciting in the market. So we're going to be catching up with you all individually once you've got your smart charts set up. It's going to be a lot of fun. I know a lot of you are going to love this process. Thank you so much for tuning in. I thoroughly enjoyed myself today. Thank you so much for your time. I wish you all the best. Thank you.